Hello everyone, good evening. Good evening everyone. Please confirm me once about audio and video quality. Good evening everyone. I hope I'm audible. I hope audio is also okay. Please confirm me once and then we will be starting our today's final revision. All okay? Chaliye. So let's start this session. Good evening everyone and welcome to Adda 24/7 JAIIB CAIIB English Medium channel. My name is CA Aarti and today we are going to proceed with our final revision of ABFM for June 2026 exam. So in this particular session, we will be completing all your 4 modules along with the important theories, along with the important numericals. So it's a request to watch this session till the end. And apart from that, you can download today's PDF through our Telegram channel. Yes, one Telegram channel is also there. You can download it from that particular channel. This PDF, even yesterday's PDF. So make sure to watch Maha Marathon that we conducted yesterday and to watch this session till the end and try to solve as many as questions you can do. Yes, and remember one thing. Today we are revising all our concepts with the help of questions. Today our main focus is not to solve only difficult questions but to solve and to revise once again all your concepts, means basically as much as we can complete in today's session. Good evening everyone. Okay, so let's start with the very first question on your screen. Yes, which India standard provides guidance on the accounting treatment for mergers, acquisitions and other types of business combinations? Yes. Tell me. So here when we talk about mergers and acquisitions, that is covered under 103. Ind AS 103 tells you how to do the accounting, mergers, acquisition, how to calculate all these business combinations. That is what covered under 103. Next, match the following. First, column A talks about section 43, 47, 55. Column B tells you about the definitions. Yes, A, voting rights of preference shareholders. B, issue and redemption of preference shares. C, definition of preference share capital. Now, this match the following is very important because they asked in your PYQ. Yes, they can ask this section number as well. Yes, all this section number is as per Companies Act 2013. Now, when we talk about 43, in 43, we talk about the definition of preference share capital. How we are going to classify any preference share capital? Number 1 feature, we want fixed dividend. After this, we will be paying, at the time of liquidation, first to our preference shareholders, then equity. Yes, these are our, you can say, features, and this is what given under 43. So first is equal to C. Then section 47 talks about what? Voting rights of preference shareholders or issue and redemption of preference shareholders. So here 47 talks about voting rights. Now, generally, we don't give any voting rights to preference shareholders. Yes, one more thing you can say here for preference share capital, no voting rights. But there is one condition. If company is not paying dividends for 2 years or more, then preference shareholders will get the voting right. Otherwise, no voting right is allowed for preference shareholders. So that is what given under, section 47. Remember, 2 or more years. And these 2 or more years in continuous manner. One you didn't pay, let's say in 25, next you didn't pay in 28. So this is not going to apply section 47. It should be in continuous manner. So second, that is going to be A. Then 55. issue and redemption of preference share capital. Now, when we talk about preference share capital in India, you are not allowed to issue irredeemable preference shares. Irredeemable means if irredeemable preference share is given, that means no life. Okay, there is no maturity. So in India, it is not allowed. Okay, in India, you cannot issue any irredeemable preference shares. You can issue only redeemable preference shares. And what is the maximum life? For all our company, generally we say maximum life is going to be 20 years. This is the maximum life of any preference shares. But if you are infrastructure project company, yes, you can issue this for maximum 30 years. But the condition is from 21st year, you need to start redeeming 10% preference shares. So these are important points for section 55. Now, next question. So here, first C, second A, and third B. So this is the right match the following. Correct. Next. Under the Startup India initiative, eligible startups are provided with what benefits on intellectual property rights? That is IPR filings. A, B, C, D. Yes, 100% rebate on trademark and patent filing? No. Then 80% rebate on trademark fees and 50% rebate on patent fees, or 50% rebate on trademark and 80% rebate on patent fees, or 75% rebate on both the trademark and patent filing? No, that is wrong. Here your answer B or C. Yes, now remember when we talk about trademark fees and patent fees, yes, so here startup companies are registering for these two, IPRs. Now when we talk about trademark, yes, now how to remember this? Yes, I said in classes also that take first here alphabetical order. First P and then T will come, Hana. Remember, in alphabetical order, first P and then T will come, and whatever the percentage is, just reverse it. Arrange in descending order. So first 80% will come and then 50% will come. Correct? So first patent will come and then trademarks will come. Yes. And for the percentage, take descending order. First 80% and then 50% will come. So that is what given under trademark 80% and patents 50%. Yes, right answer is answer B. Even this was asked in your PYQ. Correct? So remember this point. No, C is not the right answer. Yes, alphabetical order and descending order in case of numbers. This is in alphabetical orders and descending order. Chaliye. This is how you can remember this. Next, match the hybrid instruments with its key feature. Column A and column B. Now, column A, FCCB, mezzanine finance, warrant, optionally convertible debentures. Second column, A, lender can convert debt to equity on default. B, issued in foreign currency with equity conversion option. C, right to buy equity shares at a predetermined price over a period. D, holder has the choice, not obligation, to convert to equity. Now remember, this question is from hybrid instrument. Tomorrow, surely you will be getting one or two questions from this particular definition. Hana? And most of the time they ask questions based on mezzanine financing. This is very important term. Mezzanine financing. So now tell me, FCCB, this is issued in foreign currency with equity conversion option. Yes, FCCBs are here. First is equal to B. Yes, that is foreign currency convertible bonds. First B, then mezzanine financing here. Oh, yes. I'm sorry. Correct. Trademark is 50% and rebates on patent on 80%. Yes. Correct. So here correct answer is answer C. Next, FCCB, that is foreign currency convertible bonds. Yes, here these are issued in foreign currency where you have the option to convert it into equities. Yes, bonds into equities you can convert, and that is issued in foreign currency. Then mezzanine financing. See, in mezzanine financing, what we are doing, we are taking a loan. Okay. Now, we are giving one option that if we do any default, let's say I didn't repay this loan, then I will give the ownership of my company. That is what given under mezzanine financing. So, mezzanine financing is lender can convert debt into equity in case of default. So, second A. Yes, first B, second A. Now, warrants. Right to buy equity shares at a predetermined price over a period, or holder has the choice, not obligation, to convert to equity. Now, warrant means what? Here we give the right to buy the equity shares, at a predetermined price over a period. Right now, we are just issuing one instrument to them. So, this is third C. Optionally convertible debentures. Here, holders, yes, all debenture holders, they are holding one right, has the choice, not the obligation. No compulsion, and to convert into equity. So here fourth is going to be D. First B, second A, third C, fourth D. Yes, so this is the right match the following. Yes, correct. And remember, mezzanine financing is very important from exam point of view. Yes. Now coming to the next one, match the VC firm roles with its functions. Now, generally, when we talk about private equity and venture capital, yes, so always remember private equity, they invest in existing businesses, correct? Whereas when we talk about venture capital, here we are going to invest in a startup companies. Yes, here we are going to invest in a startup companies. Krishna sir, already we discussed this part, Hana. So please check your answer and then you can reply it. Okay. Okay. So private equities, here they are investing in existing businesses. Venture capitalists, they are investing in startups. Now, what is happening here when we talk about startups? Okay. So this venture capital is giving them the funds. They are providing them the funds. Now, how they are providing? They are going to take the funds from limited partners. They will be taking the funds from the limited partners. Now, in this venture capital firm, we have different position. Yes. So in venture capital firm, first position is your analyst position. Okay. After this, you have associate position, then you have principal position, and then you have partners position. So this is your scale. Yes, in your VC firm. Yes, analyst, associates, then you have here partners, and this you have then principal, and then this becomes the partners. So this is your whole, you can say, scale in case of venture capital firm. Now, analyst, what they are doing, researches market opportunities and competitive landscape, or manages fund strategy, no. Guides startup through funding, senior, no. Investors who has committed capital to the venture capital firm, no. So analysts are doing the research part. Okay, they are doing the basic research part in initial time period. So first is going to be B. Then principal. Here what they are doing, principal is going to guide startups through funding and senior to associates. Yes, so principal is going to be here. That is answer C. Okay, they are going to guide here startups and all. Then general partners. General partners are doing what? They are going to manage the fund strategy, exits and capital arrangement. So third equal to A. The limited partners, they are the investors who has committed capital to the venture capital firm. Yes. Achha, can you tell me, when here LPs are providing you the funds, yes, in return they want some minimum return. Hana? They want some minimum return, and this minimum return is known as hurdle rate. Yes, it is known as hurdle rate, minimum return what they are expecting by investing in venture capital firms. So that is also known as hurdle rate. Remember, this was asked in your PYQ. What is the meaning of hurdle rate? So right classification is going to be 1B, second C, third A, and fourth D. Okay, chaliye. Now, redeemable preference shares can be issued for a maximum of dash years, extendable to dash years for infrastructure projects. So you are saying this is wrong, I have written. Again, sir, please check your answer. Hana, I would make one request that please check your answer. I don't think so. In my notes, it is given opposite. Hana, in my notes also, it is given only 80% patents and 50% trademarks. So. Okay. Now, redeemable preference shares can be issued for a maximum period of 20 years. Just we discussed about this, and extendable to 30 years in case of infrastructure project companies. Yes. Now, next. The conversion ratio represents the number of dash that a debenture holder will receive upon conversion. So tell me, when we talk about conversion ratio, when you are holding the convertible debentures, so we are converting this into what? We are converting into equities. Yes, so here equity will come. Okay, chaliye. Next, consider. First is venture capital firms take active role in the day-to-day management. Second, venture capital typically plan to exit within 3 to 7 years. Third, venture capital investments are primarily through equity and quasi-equity. Now tell me which option is correct here. First, second, third or fourth? Now here they are asking about venture capital firm. Yes, already we discussed what is the meaning of venture capital firm. See, when we talk about venture capital firm, they are taking any day-to-day participation in your business. No, they are not taking any day-to-day management participation. Hana, though they are giving you the funds, though they are giving you the management, or you can say some participation like their professional idea, their expertise, but they're not going to involve in day-to-day activities. So that is wrong. Then, of course, VCs typically plan to exit within 3 to 7 years. Of course, they will try to exit here within 3 to 7 years and they will not proceeding further from this. Then, venture capital invest are primarily through the equity and quasi-equity. This is also true. Equity means they are taking the ownership somewhere. Hana, they are just not giving the, you can say loan. So, right answer is going to be answer 2 and 3. Yes, correct answer is answer A. No, first one is wrong. They are not taking any day-to-day participation in your business. Then, which BRSR statement is correct here? Now, this question is about BRSR. A. BRSR stands for Business Risk and Sustainability Reporting. Then B. Section A covers policy and management processes. C. Section C covers principle-wise performance disclosure. Or D. All KPIs under Section C are mandatory. Now, this question is again from your module D here, from green bonds. See, if you're saying correct answer is first one, then you are wrong. No, this is not correct. The correct full form of BRSR is business reporting, business responsibility and sustainability reporting. Yes, this is your correct full form of this. So first one is wrong. Remember, in exam also they can ask what is the full form of BRSR. So that is Business Responsibility and Sustainability Reporting. Then under this BRSR, we have three different sections. Section A, B and C. When we talk about A, here we talk about general disclosure. Yes, we talk about our company. Yes, employees, companies, holdings, subsidiary, our main objective, product, services, what we are providing here. Then here B. Under B, we are talking about management. Yes, management and process disclosure. Basically, now we are going to talk about all our governance, leadership, policies, rules, regulations. Then Section C talks about principle-wise development. Yes. Now here we have 9 principles. We have how many principles? 9 principles given by RBC. That is your NGRBC. Yes, which means that is National Guidelines on your responsible business conduct. Now, as per this 9 principles, we are going to measure through some KPIs, key performance indicators. Now, this key performance indicators are again subdivided, or you can say you have 2 further components. That is first, which is essential component, and second, that is going to be leadership component. Yes. Now here, essential component means these are mandatory components. Everyone needs to follow it. Everyone. But when we talk about leadership components, these are voluntary. Okay. If you want to follow it, you can follow it. Otherwise, there is no compulsion, no obligation on anyone. So here, first option is wrong. This is whole, sections and their sub-bifurcation of BRSR. So section A talks about policies and management processes. Or section C talks about principle-wise performance indicators. So first, B is wrong here. They are talking about general disclosures, but they are saying policy and management processes. D, they are saying all KPIs under section C are mandatory. No, only few KPIs are mandatory and some KPIs are voluntary in nature. So this D option is also wrong. So right answer is answer C. Yes. That section C covers principle-wise performance indicators. You have 9 principle-wise indicators here. So right answer is answer C. Okay, next question. Consider angel funds. Individual must have net tangible asset more than or equal to 2 crores, excluding home. Now, maximum investment horizon is 5 years. Body corporate with net worth more than or equal to 10 crores can be an angel investor. Now, you need to identify when you will call angel investment funds as a right answer. A, B, C, D. See, now when we talk about individuals, Hana, here individuals must have net tangible assets, means which have physical existence. Yes, like land, building, plant, machineries. If you are holding this, their valuation should be at least 2 crores. Yes, at least 2 crores. So here at least 2 crores means you are including here 2 crores also. But you need to exclude you can say your principal residence. Okay, where you are living. So you need to exclude it. So this is the right option. Then maximum investment horizon is 5 years. No, maximum horizon is not 5 years. This is 3 years only. Okay, this is maximum 3 years. Plus, when we talk about investment as an angel investor, you can do 25 lakh per angel investment. Okay, so this is going to be 3 years and 25 lakh. So this one is wrong. Then body corporate means companies, firms, LLPs and all. Their net worth at least that should be 100 crores. Then only you can call yourself angel investor here. Yes. So this Third is also correct. So correct answer is 1 and 3. Okay, 1 and 3. Next, which of the following valuation methodologies determines the value of business primarily by assessing the value of the assets owned by the enterprise after considering its liabilities? Income approach, market approach, cost approach, or earning capitalization approach? Now, when we talk about the valuation methods, Hana, suppose if we want to value any company, so what are the ways through which you can do it? That is income approach, market, and cost. Yes, income approach means calculating all your future cash flows, then discounting it, taking present value, and dividing with their capitalization rate. That is what income approach. Market approach means based on your comparable assets. Yes, you are going to compare it. That is what market approach. Cost approach means whatever expenses, all expenses that you have incurred, add it, that is one way, or take assets minus liabilities. Assets minus liabilities, that is what cost approach. So if you read this statement, they are saying the value of any business that you are going to calculate by taking the assets owned by the enterprise. Assets owned by the business minus its liabilities or the obligation. That is what given under cost approach. Right answer is answer C here. Okay. So D is not any calculation method here. Next, NOPLET is calculated as. Now you need to tell me which formula you are going to apply for the calculation of NOPLET. What is NOPLET? It says net operating profit less adjusted taxes here. So here we are going to calculate NOPLET by taking net profit minus dividend minus adjusted taxes. B, EBIT minus taxes on EBIT. C, EBITDA minus depreciation minus interest minus taxes. Or D, PAT plus interest minus tax shield on depreciation. How to calculate NOPLET? Right answer is EBIT minus taxes on EBIT. Yes. Now, here what we are doing, we are going to, keep all our funds. We are saying that if we are not adjusting any interest, if you are not adjusting any other, you can say equity amount, then what is your net profit? Yes. So this net profit is adjusted by taking EBIT, that is earning before interest and taxes. Directly we are going to deduct, that is EBIT into tax rate. If you deduct that directly, EBIT minus tax rate on EBIT, this will give you NOPLET. Okay. So right answer is answer B. And remember in exam also they're asking direct questions based on this. Yes. Next. A company is expected to pay a dividend of ₹7 at the end of 1 year. Now the dividend is expected to grow at a constant rate of 13% per annum indefinitely. Now the investor requires a rate of return 18% per annum. Now what is the fair value of this share? Now in exam they can tell you to calculate fair value. They can tell you to calculate intrinsic value. Yes. Or they can tell you to calculate, let's say, dividend discount model, or they can tell you to calculate Gordon's growth model. Yes, if they use any term, always remember you need to apply one same formula, that is P0 equal to D1 divided by R minus G. This is the common formula which you need to apply again and again. Okay, so remember, fair value, intrinsic value, true value. Achha, let me write true value also. Dividend discount model or Gordon's growth model if they use, or one more term they can use, that is constant growth model. Yes, they can use any term. Just apply the same formula. So here, this 7 is already is D1. D1 means future year dividend. So here also you can see expected means D1 it is. So 7 divided by R, that is required rate of return as an investor we want. So that is 0.18 minus, that is the G. G means the growth rate, that is 0.13. So what is the answer here? 0.18 minus 0.13 divided equal to 7. Yes, rupees 170 is your fair value, intrinsic value. Yes. Now, tell me if this is your true value. Okay, this is your fair value. Let's say fair value is equal to rupees 140. Okay, and in market right now your share is trading at rupees, let's say 200. So what decision you can take here? Your shares are trading at premium or at discount? Yes, what decision you will take here? Fair value is 140 only, but at market 200 price is used. So this is going to tell you that shares or company shares are trading at premium. Okay, overvalued, or you can say company share are overvalued. Okay, if fair value is 140 and company's market price of the share is, let's say, rupees 90. Okay, so this is going to be means discounting. This is means discounting. See, market means I'm talking about share market. Okay, this is the share market value. This is your share market value. So if you want to purchase, you need to pay 200, even though you know that only this value of the share is 140. Yes, that is what overvaluation, or you can say at premium companies are selling. Okay, suppose if I tell you I want to sell this pen for, let's say, 1 lakh rupees, are you going to purchase it? No, because you know it, the worth of this pen is only 500 or 10,000. Yes, so you know what is a fair value. But even if you pay me 1 lakh rupees, means you have paid me overvaluation, and I am selling here this pen at premium amount. Correct? Now suppose valuation is 1000 only. True value, true worth of this pen is only 1000. Now if I am selling to you for 7000, let's say because of some urgency, means I am selling this product at discounted price. Yes, this is undervaluation also. This is undervaluation also. So remember, they can ask in any pattern. Okay? So these are some theoretical questions also they can ask, or they can ask you to calculate. And remember, if they ask any of this term, apply the same formula. Okay, chaliye. Next question. Now in activity-based costing, a cost driver is the item for which the cost is being measured, the grouping of the cost of an activity, or any factor that causes a change in an activity's cost, or the discrete work unit of a process. So the right answer of this activity-based costing means whatever actual expenses you are doing, and whatever actual expenses you are doing, you will add only these costs. So that is going to be your activity-based costing. Yesterday also in a Maha Marathon, we solved one question. Okay. So yesterday we discussed one numerical question. Please refer to that session. Yes, and today we are solving one theoretical one. So this is going to be any factor that causes a change in an activity's cost. Correct. Next. XYZ Limited plans an investment of 20 lakhs, depreciated at 10% on SLM basis. Now for the proposed project, sale is equal to 50 lakhs, variable cost 20 lakhs, fixed cash cost 15 lakhs, excluding interest. Depreciation 2 lakhs. Okay, already they calculated this part. Okay, so we need to start with the sales value. Okay, I hope you remember our yesterday's profitability statement, which we start from the sales. Yes, that is going to be 50 lakhs minus variable cost, that is 20 lakhs. Sales means actual amount that you are selling, okay, the actual goods or services that you are dealing with. Variable cost, these are the costs which will fluctuate as per your volume of production. That is going to be variable cost. Like you are purchasing raw material, labor expenses, all these are variable cost. So this will give you contribution. So contribution is equal to 30 lakhs. Okay. Now from this, what we need to subtract here? Fixed cost. Yes. Now we have fixed cost A, that is given as cash cost. Read this, fixed cash cost, that is 15 lakhs. Now one more thing that we are going to subtract here, that is going to be depreciation. Depreciation is also here fixed. So this is going to be 2 lakhs. Now why we are subtracting this depreciation separately? Because this is non-cash expenses. And clearly in this question they are saying that fixed cash cost and this depreciation is non-cash cost. So both are different. So that is why we are separating it, deducting it separately. So what is your EBIT? 30 lakhs minus 15 lakhs minus 2 lakhs. So this is going to be 13 lakhs. So this is your EBIT. Now from this EBIT, we need to subtract now interest part. Yes, because here this fixed cost is excluding interest. And interest is equal to 2 lakhs. So 11 lakhs is your earning before tax. Before you pay the taxes, what is your earning? 11 lakhs. Now here you need to pay tax rate at the rate 50%. So 11 lakhs into 50%, that is going to be 5,50,000. So this is your earning after tax. Yes, earning after tax, or you can say profit after tax also. This is equal to 5,50,000. So can I call this 5,50,000 as your cash flow? No, this is not the actual cash flow. We need to add one more thing, and that is depreciation. That is depreciation. Depreciation is equal to 2 lakhs. Why we are adding it? Because there is no actual outflow. Cash flow after tax means what is actual flow in my business. How much actual cash I am holding in my hands. That is what CFAT talks about. So remember one thing here, depreciation, already we know it is non-cash expense. So we eliminated it first to calculate the tax rate. Now why we have deducted it before the tax rate? Because as per Income Tax Act, when you are calculating the tax amount, it is deductible. It is deductible. It is allowed to take the deductions. That is why for the calculation of tax rate, we need to deduct it. Yes, and then we calculated after tax amount, what is the earning, what is the profit we have generated, and then again we are adding it back. So that is the reason here 7,50,000 is going to be, yes, CFAT. Very good everyone. So this is your correct answer. So remember, this is your cash flow after tax statement. Okay. So right answer is answered 7,50,000. Yes. Next. Match the following. Again we have column A and column B. Column A, IPO, second trade sale, third secondary buyout, third leveraged recapitalization. Next column, A, PE firm sells to another PE firm, fund or firm. B, shares listed on stock exchange for public purchase. C, selling entire stake to a competitor or industry player. Or D, partial exit by increasing company's debt proportion. Now, IPO means what? Initial public offering. When you are listing for the first time. Yes, so this is going to be IPO, shares listed on stock exchange for public purchase. So first is going to be B. Yes, then next, trade sale. Trade sale means here selling entire stake to a competitor or industry player? Now, secondary buyout is that investment you are selling to other equity firm. See, secondary buyout is PE firm sells to another private equity fund. So, this is going to be secondary buyout. Third A. But here, trade sale means selling entire stake to a competitor. Okay, you are selling entire stake in your same industry. That is trade sale. Yes, when you sell in your own market, that is trade sale. Secondary buyout means you are selling to one more PE firm, one more PE organization. That is what. And leveraged recapitalization is partial exit by increasing company's debt proportion. So how you are, taking the exit by taking the more debt amount in your venture capital firm, in your startups. So your startup will take more debt and they will be repaying your amount. So their debt will increase and you will take the exit part. So that is leveraged recapitalization. So here answer is D. Always remember, leveraged means you are taking debt, you are taking loan. Okay, so by taking a loan, you are going to take the exit. So right answer is first B, second C, third A, fourth D. Yes. Apart from this, we have one more exit plan, that is dual track process. Now, dual track process means here company will be taking two different exit plan like IPO plus trade sale. Company will go for the listing also, plus they will be selling rest of the ownership to the same industry in your you can say competition also. So this is your one more type of this is a fifth type of exit strategies. So these are the five exit strategies these P companies can take. IPO, trade sale, secondary buyouts, leverage recapitalization, and last is dual track process. Please everyone revise this. Yes, this is important for your exam point of view. Chaliye. Next, suppose a project costs 10 lakhs and yield a profit of 2 lakhs after depreciation of 10%, straight line method, but before tax at 50%. What is payback period? Now, how to calculate payback period here? See, let me tell you first very easy example. Let's say I purchase one car. Okay. Now, I purchased this car for 20 lakhs. Now I decided to use this car for rental purpose. So here my rental income is going to be every year 4 lakhs. This is my estimation. So in how many years I can get back this invested amount, this 20 lakhs? So this is going to be, let's say, first year 4 lakhs, then 4 lakhs, then 4 lakhs, then 4 lakhs. Means within 5 years, I'm going to get back all this invested amount. So this is going to be payback period. Yes, this is a simple example of payback. This is the same concept we need to apply in this particular question. But before you take directly the income, always remember they have given you the yield of profit of 2 lakhs. And this is the profit after depreciation but before tax. So profit before tax is equal to 2 lakhs. Yes. Now first we need to pay back the tax amount, that is going to be 50%, 1 lakh. So this will give you profit after tax, that is 1 lakh. But this is not the final amount that we will be taking or we will be generating from this particular project. So we are going to add back here depreciation amount. Yes, because ultimately we want to know what is the actual cash that we have generated. And actual cash that we have generated is known as cash flow after tax, CFAT. So don't take only PAT. PAT is profit after taxes. That is incomplete cash that you are holding here. So depreciation, how to calculate? In this question they are saying project cost is equal to 10 lakhs. This is 10 lakhs and depreciation rate is 10%. So this is going to be 1 lakhs. So what is your CFAT, cash flow after tax? That is 2 lakhs. Yes. Now, Always remember, when you have same or constant cash flows, apply this formula, that is payback period formula equal to initial investment divided by annual cash flow. Yes, so initial investment, that is equal to 10 lakhs divided by what is your annual cash flow every year, that is going to be 2 lakhs. So again, answer is same, that is going to be 5 years. Means in next 5 years we will be, able to take back our invested amount. So that is your payback period. Payback period. Okay. Chali. Next. XYZ Limited manufactures bags. Now the fixed cost is 20,000 per month. Each bag is sold for 55 and the variable cost per bag is 50. Company sold 1500 bags during the month. Now what is the break-even unit? Now this concept was asked in your PYQ. Correct? So remember, this is very important concept, break-even in units. What is the meaning of break-even in units? Break-even means business is working at no profit, no loss position. Okay. They are not able to generate any profit. They are not incurring any losses. So what is the formula we need to apply here? Break-even in units is equal to fixed cost. Always remember, fixed cost we need to take in total. Okay, this is total fixed cost divided by CPU. Now what is CPU? CPU means contribution per unit. Yes, in denominator we need to take contribution per unit. How to calculate contribution per unit? Selling price minus variable cost. So if it is given in per unit, let's say here also they have given in each bag value, sales value 55 and variable cost per bag value is 15. So this is 55 minus 15, 40. So total fixed cost 20,000 divided by 40. So 20,000 divided by 40. Yes. 500 units is your break-even point. Acha, tell me, if company, let's say, okay, as per the given scenario, now company is selling 1500 bags. So tell me, now you know what is your break-even level. Now you know how many units company sold in previous month. So tell me, here company earned profit or loss? Company incurred profit or loss? Yes, right answer is 500. See, all these questions are without option question, है ना? This is one of the exam pattern. Yes, so company is, selling their goods at a profit side, correct? So here, as company is selling above 500, company is in profit side and not a loss-making side. If company sells any product less than 500, then that would be loss-making side. Okay. So remember this point. This is also used in theoretical manner. They can ask in theory also. Okay. Chaliye. Next, a manufacturing company reported a net operating profit less adjusted taxes, that is NOPLET. Now you know how to calculate NOPLET, of 18 lakhs during the financial year, and the company's OCI, that is operating invested capital, 1 crore 20 lakhs. Calculate ROIC, return on invested capital. Invested capital means when you start any business, you require funds. Okay, so what is the total funds that you have generated? So invested capital means total funds that you have generated. From that total funds, what is your return that you have earned? That is what NOPLET here. This is your income that you have generated by investing the capital amount. Yes. Now this OCI you can calculate by taking operating fixed assets plus operating WC, that is working capital. This is how you can calculate your operating invested capital. So formula of this ROIC is equal to NOPLET, that is your income, that is your earning by investing OCI, that is operating invested capital. So NOPLET value is already given, that is 18 lakhs you have generated by investing 1 crore 20 lakhs into 100. So what is your answer here? 18 lakhs divided by 1 crore 20 lakhs. Yes. So 15% is the return that we have generated. Yes, this formula is important. This was asked in a PYQ. So already you know how to calculate NOPLET. Let me repeat it again. NOPLET is equal to EBIT minus tax on EBIT. Okay? This is one formula for NOPLET, and here is the formula for OIC. This is the formula, and here's the answer. Here also you can refer. Next. E Limited is going to invest in a project a sum of 5 lakh having a lifespan of 3 years. Now salvage value of machine 50,000. Profit before depreciation for each year is 2 lakhs. Calculate ARR based on average investment basis. Again, this is your numerical question, everyone. Now here ARR means what? Accounting rate of return. Okay. Now, what is ARR? See, this is one of your non-discounting methods. Non-discounting method means no use of time value of money. Okay. No need to use this time value of money. Now here one method is a payback period method that we already calculated, and second method under this non-discounting is ARR, accounting rate of return. Now as per this ARR, we are going to identify if we select any project. Okay, if we select any project, let's say here I have selected project A, PA. So over the life of this project, what is my total return that I am going to generate? That is what here ARR will tell you. ARR means total return that you are going to generate from this project. Now, what is the formula we are going to apply here? They have given you the method also that we need to use here. Method name is average investment basis. So, average investment basis formula is average annual profit divided by average investment into 100. Okay, this is your formula. Now, if you check here, project value is 5 lakhs. Okay, lifespan 3 years, salvage value is given. Now here for the average annual profit before depreciation is given, that is equal to 2 lakhs. Are you going to take directly this 2 lakhs? No. First here you need to deduct the depreciation amount. Yes. So depreciation is going to be what they here as per the given data you are going to apply SLM method. One of the method of depreciations, that is SLM. Cost minus salvage value divided by life. Okay. Most of the time we need to apply the same method. So cost is already given 5 lakhs minus salvage value 50,000. Salvage value, or they can write for this residual value. Okay. Now in two ways they can give you the depreciation. See, when we talk about depreciation, first thing they can give you in percentage and directly apply this percentage, or B, they can give you the details of cost, scrap value and life. If they are giving any of this, select one method, check which method they are asking or which type of depreciation you need to calculate, just apply it and you can get the direct answer. So 50,000 5 lakh minus 50,000 divided by 3. 4 lakh 50 divided by 3. That is equal to 1 lakh 50,000. Okay, so here depreciation is going to be how much? 1 lakh 50,000. After this, if you means yearly, 1 lakh 50 will subtract. So profit after depreciation, that would be 50,000 only. Okay. So what is your average annual profit? So for average annual profit, AAP equal to 50,000 plus. For how many years we are going to run this business? 3. 50,000, 50,000, 50,000. Take simple average. So that will give you 50,000 only. Now, next part that we need to calculate here, that is average investment. Now, in average investment also, we have two different methods. Like first is your opening investment plus salvage value divided by 2. This is one method. Okay. Or let's calculate with this first. Opening investment, that is given 5 lakhs plus salvage value already given in the question, that is 50,000. Acha, in exam, if they are not giving you any salvage value, take 0 as the answer. Hana? No need to consider any values from your own. So this is 5 lakh 50 divided by 2. 2 lakh 75,000. So here annual profit 50,000 divided by 2 lakh 75,000 into 100. So 50,000 divided by 275 into 100. Yes. Right answer is 18.18%. This is your ARR. Means if you select this project over the life, you are going to generate 18.18%. Also, let me tell you one more formula for average investment. In exam, they can ask theoretical questions based on this formula also. They can tell you to identify the correct formula. So this is one way to calculate average investment. One more formula we have, that is average investment equal to half of your investment value minus salvage value. Yes, this is your one bracket plus salvage value. Okay. So this is one more formula, and in both the formulas you will be getting the same answer. Like here also, if I use taking half of 5 lakhs minus 50,000. Okay, this is your one bracket plus 50,000. So 5 lakh minus 50,000, taking half plus 50,000. Answer is same. That is 2 lakh 75,000. Yes, chali. Next. Suppose we have 3 projects involving discounted cash outflow of 1 lakh, 2 lakh 50,000 and 50,000 respectively. Now suppose further that the sum of discounted cash inflows for this projects are 1 lakh 40, 275, 46 respectively. And calculate the respective PI for the 3 projects. Now you have 3 different projects. Take a project, let's say 1, project 2 and project 3. What we need to calculate here? PI. What is the formula of PI? PI is equal to discounted cash inflow divided by discounted cash outflow or initial investment. Okay. Now see in PYQ they asked question based on this formula. Okay, like in numerator which value you will be taking, and they asked by giving you 4 options: inflows, outflows, discounted or discounted outflow, like that. So remember, formulas are again very important. They can be ask so many questions based on this. So here if we select the project 1, okay, so here outflow for the project 1 is equal to 1 lakh. And inflows, already this is in discounted value, that is equal to 1 lakh 40,000. Then for the second project, that is going to be outflow 2 lakh 50,000. And for the third project, it is 50,000. Second project 2 lakh 75,000. And third one 46 50,000. So first project PI is 1,40,000 divided by 1 lakh, 1.4. 2,75,000 divided by 2,50,000, that is 1.1. 46,000 divided by 50,000, that is 0.92. So tell me, out of these three projects, which will give you the highest profit? Out of these three projects, which project will give you the highest profit? Highest profit. And tell me, which project will give you loss? Yes. Always remember, there is one rule when we talk about rule of PI. If PI value is greater than 1, it will give you profit. Okay. Higher PI, higher profit. That is one rule. Okay. Then second one is, if PI is greater than 1, less than 1, your business is going to be non-profitable. Okay. You will see losses. So as per this, if you talk about the highest profit, here project 1 will give it. But if we talk about the loss making profit, that is going to be project 3rd. Okay. So this is the rule which you need to remember for PI. Remember the formula, rule, and how to calculate it. Correct. Next question. The equity shares of ABC Limited presently generate dividend payment of ₹7 every year. Growth rate as of right now is 30%. On the other hand, this will decrease in a linear fashion over the course of 10 years, and then it will level off at the 10%. Now, what is the company's intrinsic worth per share, assuming that investors require a 17% on their investment? Now, first of all, tell me which method we are going to apply here. Everyone, before you solve this, tell me the first question, that is, which method we are going to apply here. Yes. Yes. Now, how to identify that which model we need to apply here? See, first of all, if you read this question, very good, everyone. Very good. Now, I think everyone knows how to identify this. Correct. Now, if you read this question, you can say that company is giving you, D0, ₹7. Yes. And growth rate right now is 30%. Means this is the, exceptionally high growth rate. This is growth 1, which is 30%. On the other hand, they are saying will decrease. This 30% growth rate will decrease in a linear fashion. Linear fashion means over the period, equally, it will fall down. And in how many years it will fall down? In 10 years. After 10 years, it will level off at 10%. Okay, so we have two growth rates. So when we have two growth rates, it means it is related to two-stage model or H model. Okay, two-stage or H model. But here is one hint which tells you that this is the H model. Though it is two-stage growth. But along with this, we have one more thing, that is linear fashion. Okay, equally over the period it will fall. So here GA, that is exceptionally growth rate. Then GN, that is going to be 10%. Okay, and here we want to calculate one more thing, that is H value. Now, H value means when you are seeing the fall now from 30% to the normal growth rate, this time period is denoted with the H value. So, H is equal to life in which your higher growth rate will fall to the normal growth rate divided by 2. 10 divided by 2, that is equal to 5. And we required rate of return, that is 17%. Now here, let's calculate what we need to calculate here, intrinsic worth. Intrinsic worth, that is P0. Yes. So first is going to be D0 into 1 plus G divided by R minus G. So this is going to be your GN, normal growth rate, normal growth rate. And this bracket, achha, if you see only this bracket, what you can calculate here? With this bracket, we are calculating abnormal growth rate time period or normal growth rate time period. This bracket calculates which time period growth amount, abnormal one or normal one. Very good, normal one. Okay, this bracket helps you to calculate normal one. Now add this bracket with D0 multiplied with H in bracket GA minus GN divided by R minus GN. So D0, 7 into 1 plus GN, that is 0.10 divided by R, 0.17, GN, that is 0.10. This is your first bracket plus. Second bracket, 7 into 5 into 0.30 minus 0.10. 0.17 minus 0.10. Yes. So what is the final answer? Seven into 1.1 divided by 0.07. So first bracket will give you 110 value plus second bracket 7 into 5 into 0.2 divided by 0.07. That is equal to 100. Yes, so answer is 210. So this is the intrinsic value when we are going to use H model. Okay, I hope now this formula is clear to everyone. Yes, 210, correct. Okay, next question. The following 4 factors have been identified as explaining a stock's return. Now, always remember, when you want to calculate the return of your stock, you have 2 ways to calculate it. One is your CAPM method, okay, where you consider only your share market. And one more method is your APT method, that is arbitrage pricing theory. Now, as per arbitrage pricing theory, we are calculating all factors of, you can say, shares or your return, which will affect your return. All factors we need to consider. That is the difference between CAPM and APT. Now, as per this question, you have different factors, which will affect your stock return, like interest rate, industrial production, oil prices, exchange rate, and risk-free rate. So now we need to apply here APT formula. APT formula for the expected return for this stock. So what is the formula? Required rate of return equal to risk-free plus risk premium into beta of first factor, that is IR, plus risk premium into beta of your second factor, that is industrial production, plus risk premium into beta of oil prices, plus risk premium into beta of exchange rate. So what is the final answer here? 4 plus 0.8 into 3% plus minus 0.20 into 6% plus 0.9 into 8% plus 0.7 into 6%. So what is the final answer here? Remember, in your second bracket, we have negative sign. We have negative sign. Now it's your mathematical equation. Just solve it. Yes. So final answer is going to be 5.8%. Okay, just solve this and you will get the final answer. Correct. Yes. Chaliye, next question now. So this is your required rate of return when you are selecting all these factors for calculation of the value. Next, compute the net present value for a project with an initial investment of 1 lakh. The net cash flow for year 1 is 54,000, year 2 90,000 and year 3 is 45,000. Calculate the company's cost of further the company's cost of capital is 10%. Okay, and you have here present value factors for each year. You need to calculate NPV. Now what is the formula of NPV? NPV formula is sum of present value of future cash flows minus initial investment. This is the formula. Okay. Now we know what is the initial investment amount, that is 1 lakh. Initial investment means the amount you have invested for starting of any project. Now here how to calculate the sum of present value of future cash flows. For how many years we are going to run this project? For 1, 2 and 3. Okay. We have future cash flows given in this question, that is 54,000, 90,000 and 45,000. Now multiply this future cash flows with the present value factor. For the first year, factor is going to be 0.909, second year 0.826, third year 0.751. So this will give you present value of future cash flows. So that is 54,000 into 0.909, that is 49,086. 90,000 into 0.826, that is 74,340. 45,000 into 0.751, 33,795. 49086 plus 74340 plus 33795. So that is, oh, I made some mistake, I think, by during the addition. 49,086.74340 plus 33795. So total value is 1,57,221. Yes. So sum of present value of future cash flows is 1,57,221. So what is your NPV here? That is 57,221. This is your answer. This is your NPV. So if they tell you, if they ask you whether you are going to accept the project or reject, yes, what is the rule in case of NPVs? If NPV is in positive, yes, accept it. If NPV is negative, reject it. Okay. Always remember, if NPV is positive, accept the project. If NPV is negative, reject the project. So this is the rule which we need to apply in case of NPV. Correct answer is yes. Yes, most of the time they are going to provide this valuation. Okay. Because how to calculate it, this PVs already you have done in JAIIB. So now they are not asking about JAIIB level. They want to, check your advanced level. So most of the time they are going to provide this present value formula. If they are not providing you any present value formula, so remember, present value is equal to your cash flows divided by 1 plus r to the power n. You can apply this formula, or you can apply 1 divided by 1 plus r to the power n. Okay, this will give you present values. Yes, chaliye. Next question. Now, if degree of financial leverage is 4 and there is 15% increase in earning per share, then EBIT will be So for the calculation of DFL, okay, we have two formulas. One formula is EBIT divided by EBT. This is one formula, or you can use one more formula, that is percentage change in this EPS divided by percentage change in EBIT. Yes, so these are the two formulas you can apply. But remember, as per the given information, we are going to use the second formula. Yes, already DFL value is given, that is equal to 4. And if there is 15% increase in earning per share, so there is increase of 15%. And what is the missing data here? That is EBIT. So X is equal to 15% divided by 4. So EBIT value is going to be 15% divided by 4. That is going to be 3.75%. Yes. So which option is correct here? This is your none of the above. Yes. Increase in value by 3.75%. Correct answer of this question is answer D. Yes. Next question. Now let's consider a scenario where a newly startup company wants to expand its operations. For that day, they have estimated a project budget of 50,000. Now, company wants to start one project and their budget of investment is 50,000. Now, the company is expected to generate cash inflows 10,000, 15, 12, 8,000, 15,000 to get for the 5 years. Calculate the payback period for the newly startup business. Yes, what we need to calculate here, that is payback period. Yes, already we have solved one question when you have same type of a cash flow. Let me tell you where we have done this payback period method. This is one method of payback period when you have same or constant cash flows. I hope you have solved this one. Okay. Now, second type of a payback method is when you have different types of cash flow. Like right now on your screen, you can see your cash flow is fluctuating for year by year. Now you cannot apply that formula. Okay. So now how to calculate this? You need to take the cumulative one. Cumulative one means adding each year revenue. So first year 10,000. In second year, total cash flow is going to be 10,000 plus 15,000. So that is 25,000. Okay. Then again, third year, if you work, you are going to generate total 37,000. Yes. Now again, if you add 37,000 plus 8,000, that will give you here 45,000. But now if you add 15,000 in it, if you add here 15,000 in it, it will give you 60,000. But you know what payback method tells you? Payback method tells you need to stop your calculation. You need to stop your calculation as soon as you reget or you take all your invested amount. So here, as soon as you are taking back all your 50,000, you will stop your calculation. So here, if you see from the 4th to 5th year, Hana, if you work for 12 months, here if you work for 12 months, you are going to generate 15,000 in total. You will be generating here 15,000 in total. Correct? But are you going to work for total 15,000? No. We are going to work partially. Yes, we are going to work partially till we generate next remaining amount. So what is the remaining amount that we want from this particular project? That is going to be 50,000 minus already recovered amount 45,000. We want only 5,000. So we won't be working for full here 12 months. Okay, because 12 months equal to 15,000. We are going to work only partially. Up to the amount 5,000 we are generating. So it is going to be payback period equal to 4 years plus 5,000 divided by here 15,000. So 5,000 divided by 15,000 plus 4. Yes, that is going to be 4.33 years. Now, no need to convert it into months because in your IABF book also they are giving answers in this manner only. Directly divide required amount divided by total amount. Directly they are applying this formula. So answer is equal to 4.33. Yes, correct. I hope everyone got this. Okay, this is one more method of applying payback period concept. Sorry. Next question. Match the VC funding stage with its description. Seed financing, expansion financing, acquisition financing, or exit. Yes. Next column you have funds provided to scale existing operations. B, initial investment for idea validation. C, funds to acquire another company or business. D, IPO, trade sale, or buyback by promoters. See, seed financing is used when we are talking about a startup companies, है ना? It is your initial investment for idea validation, correct? So seed financing is used in your idea validation when we talk about different stages of startup. Yes, we have idea phase, seed stage, then we have Series A, scaling, yes, then exit comes. So seed financing is used in case of IPOs, in case of startup companies, है ना? So that is first B. Here startup companies we are talking about. Then expansion financing. Expansion financing means funds provided to scale existing operation. Expansion means you are going to, increase your business area and you are going to generate more types of manufacturing factories and all. That is what expansion financing. So this is second A. Acquisition financing. Acquisition means when you want to acquire one more company. Yes, acquisition means when you want to acquire another company. So funds to acquire another company, that is going to be third C, and exit, that is D. In today's session only we discussed, different types of this exit strategies by private equities. See here. Already we discussed in today's session only. Let me show you where. See here. Okay, all these 5 types of strategies which companies are using at the time of exit. So remember this point, IPO, straight sale, secondary buyout, leverage recapitalization, dual track process. These are common strategies which companies are using. So please everyone revise these concepts again. This is very easy concept. Correct answer is 1B, second C, third A, and fourth D. Chali, coming to next question now. If the risk-free rate at present in the economy is 5.50, the cost of equity of XYZ is 16%, expected return on the market portfolio is 12.5%, then beta of the company will be. Yes. So can you tell me which method you are going to apply here? Which formula you are going to apply here? Because directly they are not talking about any formula, any method. They're just giving you the values. Yes, we are going to apply here CAPM formula. Capital Asset Pricing Model formula. Very good. So what is this formula? Helps to calculate required return. Okay. So RJ is equal to RF plus beta into RM minus RF. Yes. So now here we have risk-free rate of return. Yes, that is 5.50. Beta is missing here. Beta is missing here. Okay. Then we have cost of equity. Cost of equity or required rate of return. Both are same. That is 16%. And expected return on the market portfolio, that is 12.50 minus 5.50. So 16 minus 5.5, that will give you 10.5. 10.5 equal to beta in bracket 12.5 minus 5.5. So that is 7. So 10.5 divided by 7, that is going to be beta equal to 1.5. Yes, this is your right answer. 1.5 is your beta. Pankaj sir, please recalculate your answer, sir. ठीक है, cost of equity they can tell you, or they can write here required rate of return. ठीक है, now when we talk about investor point of view, ठीक है, if your point of view is from investor's side, then you are going to call it required rate of return. ठीक है, if your POV is investor's side, but if your POV means now you are talking about company's side, so that is going to be cost of equity. Cost of equity they can ask in any pattern, है ना? But remember, whatever pattern they are going to ask from investor's point of view or from company's point of view, you are going to apply the same formula, that is CAPM formula. Okay, if they're giving you the details like all these things, RF value is given, beta value is given, market risk premium or expected return is given, then apply the same formula. But if they're giving you more than one factors, okay, like in your today's session also we solved APT na, so use that APT formula when you have more than one factor. Apart from share market, when you see other factors, apply APT formula. Okay, so this point is very important. Remember, in theory questions also they can ask. Correct? Chaliye. So right answer of this question is 1.5 beta. A company ABC Limited produces and sells 30,000 shirts. Now the selling price per shirt is 700, variable cost 350, fixed operating cost 40 lakhs. Calculate degree of operating leverage. See, this leverage unit is now very important in each and every attempt, and continuously you can say from past 4 to 5 attempts. Okay, means after syllabus change, continuously in each and every attempt they are questioning at least 3 to 4 questions from this operating leverage till now. So we can expect that again IFBF will follow the same pattern and they can ask, you know, approx 3 to 4 marks question. Even in one of the attempts, I cannot recall which exact attempt, they asked up to 10 marks question only from this operating leverage. Okay, so if tomorrow again they are going to give high weightage to leverage unit, then they can ask up to 10 marks also only from this one unit. So this is very important. Yes, so what is your DOL formula? DOL formula is contribution divided by EBIT. But as per the given question, we don't have directly contribution in EBIT, na, but we know about the profitability statement. Yesterday also we discussed this. So start with the selling price, that is already given 700. Subtract variable cost, that is 350. This will give you contribution per unit. Per unit data of selling price and per unit is given, so it will give you per unit contribution. So 700 minus 350. This will give you 350 contribution, but directly you cannot subtract fixed cost because fixed cost given is in total. So multiply with units, and units here is 30,000. So 350 into 30,000, that is going to be 105, this much. So this is going to be your total contribution. Okay. Subtract fixed cost here, that is 40 lakhs. That is 65 lakhs. So this is your EBIT. So contribution, that is 1 crore 5 lakhs divided by 65 lakhs. So 1 crore 5 lakhs divided by 65 lakhs. So that is going to be 1.61. Yes. Achha, tell me, here your organization, that ABC Limited, is working above break even or below break even? Yes, correct answer is 1.61. Okay. So here, whenever your answer is above 1, it means company. Okay. If DOL is above 1, it means company is working above break even level. Okay, that is the point. So this is the conclusion you can take here. Means company is generating profits. If it is below this one, of course it is going to be loss making company. Yes, chaliye. Coming to the next question now. The following data is provided Here the notional risk-free interest rate, USA 5%, notional risk-free interest rate in India 9%. Spot rate $1 is 87. Now we have to calculate the estimated spot rate of US dollar at the end of the year. Yes. So here you need to calculate the spot rate. What is the formula of spot rate? Achha, so I got one answer, that is 90.31. Okay, so a spot rate is here S1, because we need to calculate for this year only. So S1 is equal to S0 in bracket 1 plus RH divided by 1 plus RF to the power T. Okay. Now here, if you see the current spot rate, that is 87. This is your S0. Now RH, this means your home risk-free rate. Okay. RF means this is your foreign risk-free rate. So here S0 is 87 into 1 plus RH. This is going to be your RF. This is your RH. 0.09 divided by 1 plus 0.05 to the power 1. So 1.09 divided by 1.05 into 87. Yes, correct answer is 90.31. Yes. So $1 equal to rupees 90.31 from means at the end of the first year. Yes, correct. Okay, so this is one formula they can ask from your capital investment in international markets. Next, the following data is provided. First, the risk-free discount rate in country X is 4%. The risk-free discount rate in country Y is 10%. Now, the risk-adjusted discount rate required by a specific company in country Y is 20%. Calculate the risk-adjusted discount rate in country X, which will be acceptable to the company. Now, what is happening here? Here, we need to calculate the required rate of return, which is also known as risk-adjusted discount rate, RADR. Okay. In previous question, we calculated the spot rate, means $1 equal to how much in rupees we need to pay. That is what we calculated here. But now we are going to calculate the return, the expected return we want to generate from our project. So for the RADR, why we are using it? Let's say this is your India. Okay. You are living in India, you know about all the pastel factors, about the circumstances, about everything you know. So you know about risk-free also. Okay, let's say in India, risk-free is here 10%. Risk-free means if you invest in government bonds, you will get no risk and free 10% return you can generate. But if you are investing in India only, some risky projects, here your required rate is going to be 20%. Yes, like if you invest in any company, then risk is there. So your expectation is 20%. But now you want to start your project outside India. Let's say this is USA. Okay, this is Y here and this is X here. Now you know about government risk-free interest rate, that is 4%. What is your expectation in this country? What is your expectation in this country? That is missing here. Now, how to calculate it? Yes, we have one formula, but before we discuss about that formula, remember one rule here. That rule says that 1 plus RP, whatever premium you are getting because of taking a risk, that is going to be constant. Constant in both countries. Okay. Whatever risk you are taking, and for that risk, whatever premium company will pay you, that will be constant in both the countries. So the formula that we need to apply here for country Y that is going to be 1 plus our required rate equal to 1 plus risk-free rate into 1 plus risk premium. And here 1 plus required rate is 0.10 equal to 1, sorry, this is 0.20, 1.10 into 1 plus RP. So 1 plus RP is equal to 1.2 divided by 1.1, that is 1.0909. Just check this answer. Na? Now, using the same 1 plus RP, we are going to apply now in country X. That is 1 plus RJ equal to 1 plus RF, 1 plus RP. So what is the required risk-free return in country X? That is 0.4 into 1 plus 1.0909. So 1 plus required rate of return is equal to 1.04 into 1.0909. So that is 1.1345. So required rate of return is equal to 0.1345, or in percentage 14.45%. Yes, correct. Check it. That is 13.45%. Yes. So this is our RADR. That is our required rate of return in country X if we start any project. Okay. Now coming to the next question now. The data in respect of QPR Limited is given. Additional finance required 30 lakhs, retained earning 5 lakhs, debt to equity ratio 70 is to 30 is to 70. Cost of debt before tax up to 3 lakhs 10%, beyond 3 lakhs 14%. Company's tax rate is 20%. Now calculate post-tax average cost of additional debt. Now here what we need to calculate. See, suppose we are running one company known as PQR Limited. Now you want some additional funds. And how much you want additional funds? That is 30 lakhs. Now companies are having different ways to generate this 30 lakhs. They can go for loan, they can issue equities, yes. But here they are saying that if we are going for additional funds equal to 30 lakhs, we are going to generate some amount through debt and some amount through equity. Yes. So how much you are going to generate through equity and how much you are going to generate through debt? Let's calculate it. So 30 lakhs divided by 100 into 30. Yes, so this will give you 30 lakhs into 30%. So 9 lakhs you are going to generate through debt, okay? And remaining, that is 30 lakhs into 70 divided by 100. So 30 lakhs into 70 divided by 100 means 21 lakhs you will be generating through equity. Now in this question, we need to calculate if company generates 9 lakh through debt, means if company takes 9 lakh loan, then what is the cost? What is the expense company will be bearing here? So let's calculate here. So cost, let's first calculate interest part. Interest. So 9 lakhs you will generate in two different ways. Up to 0 to 3 lakhs you will be paying 10%, so that is going to be 30,000. Now above and beyond 3 lakhs, remaining amount is going to be 9 lakhs minus 3 lakhs means 6 lakhs. On this we need to pay 13%. Yes, so 6 lakhs into 13%, that is 78,000. Now, average cost of debt is equal to 30,000 plus 78,000. Okay, 30,000 into 78,000. Now, we want this additional debt cost after tax. What value we have after tax? That is 1 minus 0.20 divided by total debt, that is equal to 9 lakhs. So that will give you 30,000 interest plus 78,000 interest minus 1.20, that is 0.8 divided by 9 lakhs, that is 0.096 or 9.6%. Again, please calculate this answer. 30,000 plus 78,000, 1 lakh 8 here into 0.8 divided by 9 lakhs into 100. How come 13% is coming? Let me check it again. 3 lakhs, I need to, acha, it is 14%. Oh, I'm sorry. Take it. Okay, wait a minute. Here I have calculated by taking 13%, but in question it is giving 14%. Okay. So 6 lakhs into 14%. So 84,000. Take it. 84,000 plus 30,000. So 1,14,000 into 0.8 divided by 9 lakh. Okay, so right answer is 10.13%. So this is going to be average cost of debt. Here I have considered 13% by mistake. Yes, this is your final answer and this is how you need to calculate an exam. Beyond 14%, correct. Okay. Now I hope everyone got this 10.13%. Yes, this is how we need to calculate in case of cost of additional debt. Chaliye, coming to the next question now. PQR Limited is an unlisted company and its valuation is to be done using relative valuation model based on two comparable listed companies, that is A and this is B Limited. Okay. So PQR Limited, sales 500, EBITDA 80, book value of equity 300, debt 120, cash 40. Now particulars, we have sales, EBIT, depreciation, book value of equity, debt, cash, number of equity shares, market price per share. A Limited data is given, B Limited data is given. Now first question is calculate enterprise value of A Limited. Now what is enterprise value method? That is market value of equity plus debt minus cash. Yes, so total value of equity is going to be what? In case of A, that is 15 lakh shares into price is 120 plus debt is 500 minus cash 300. So 15 into 120 plus 500 minus 300. So 2000 is your answer. 15 into 120 is given. Market price per share is given. Plus 500 minus 300. So first answer is 2000. Okay. Here we need to take the market value of enterprise valuation. Now, next, EV EBITDA of B Limited. Yes, please calculate EV EBITDA of B Limited. Now we are talking about this B Limited. Okay, so EV value of this B Limited is going to be again same 10 lakhs into 100. This will give you equity share value plus debt amount is 400 minus cash, that is 100 here. So what is EV enterprise value of B? That is going to be 10 into 100 plus 400 minus 100. 1300 EV. Now, how to calculate EBITDA? See, in this question, they are giving you EBIT and depreciation. So, if you subtract from this depreciation amortization, you get EBIT. Directly in this question, EBIT is given, that is 230, and depreciation is given, that is 40. So, what is this EBITDA? That is the missing data. So, EBITDA is equal to 230 plus 40, that is equal to 270. So, EV divided by EBITDA is equal to 1300 divided by 270. So, value is 1300 divided by 270, that is 4.81 times. Means based on our EBIT, based on our EBITDA, we are valuing our company 4.81 times. Okay? This is about EV EBITDA of B Limited. I hope everyone got this point. Now coming to the next question of this. So here now value of QPR using EV to sales multiple we need to calculate. So here PQR is our unlisted company. This is our relative valuation. Comparable method we are applying here, everyone. Now we are going to use this listed company's data, A and B's company data, to value our PQR based on EV sales multiple. So now first of all we need to calculate listed companies EV sales. Okay. So if I talk about A, total EV enterprise value of A already we calculated here, that is 200. That is 2000 divided by sales value of this A, 950. Now B, again we know what is enterprise valuation of B, that is 1300. So 1300 divided by sales, that is 1100. Okay. So what is the value of these two companies? 2000 divided by 950, 2.10, and 1300 divided by 1100, that is 1.18. Yes. Now these two companies are most comparable with PQR. These two companies are most comparable with PQR. Okay, so that is the reason we are taking both the valuations. Now directly can we apply this? No. Now next thing we need to take their average. Yes, average of these two values. So 2.1 plus 1.18 divided by 2. This will give you 1.64. So average EV sales value is 1.64. Now we are going to apply this 1.64 for the valuation of QPR. Let me just close this video. Yes, multiply this average EV of sales with the sales value of QPR, that is equal to 500. So now this will give you enterprise valuation of QPR. This is your value of QPR. So 1500 into 1.64, that is 820. This is your answer. Okay. This is how we need to calculate value of PQR limited using your relative valuation method, comparable method. Everyone, if you don't know how to calculate this, it's a request to please watch this session or download this PDF through my Telegram group. And link will be provided you after this session in Telegram, that comment section. You can download it from it. Yes, chalo. Now coming to next question. Now let's solve few theoretical questions, everyone. So during a branch audit, noted that the bank had introduced time motion studies, standardized procedures, efficiency benchmarks for loan processing. Now this approach is most closely aligned with the work of Henry Ford, Frederick Winslow Taylor, Elton Mayo, or Peter Drucker. Now who tells you that bank are using some standardized procedures, some time motion studies they need to do, some efficiency benchmark? Who is doing all these things? This is given by F.W. Taylor. Okay, this is from module A, unit 1. Okay, contributors are very important for your exam. So right answer of this question is F.W. Taylor. Next, which of the following is a correct match according to Maslow's hierarchy of needs? First one, only unsatisfied needs influence behavior. Second, lower level needs must be satisfied before higher level needs. Then third, satisfied needs continue to motivate employees equally. Fourth, the higher the progress of the hierarchy, the more individuality a person exhibits. So which option is correct here? As per the Maslow's hierarchy of needs, we are talking about individuals' point of view. Of course, when you are starting with the lowest level, where we talk about our basic needs, yes, like water, shelter, food, all these things are our basic needs. So first we need to start with that. So here, correct match is going to be first this one. Okay, then only unsatisfied needs influence behavior. Of course, if our needs are not satisfied, our behavior will be different. So first one is also correct. Then satisfied needs continue to motivate employees equally. No. The higher the progress, the hierarchy, the more a person will exhibit. Yes. So right answer is answer A. No, here correct answer is answer A. Only unsatisfied needs will influence your behavior. Now, if you are not satisfied with the food, shelter, water, of course, you will not be motivated. You will not be, happy with your work. If you are satisfied with the needs, continue to motivate employees equally. Then already you are satisfied. Then what is the motivation of it? Already you are getting food, water, shelter. Then if I provide you more food, more water, more shelter, so is this giving you any extra sort of motivation? No. If it is unsatisfied, then your behavior will be changed. And if I provide you all this food, water, shelter, then of course you will feel satisfied with that. So that is what your correct answer is answer A here. Okay. Then the System School of Management was propounded by Daniel and Ludwig von in the context of a banking. Which of the following best illustrates this school's core concept? A, B, C, D. A bank adopting mathematical models to reduce NPAs. B, a bank constantly interacting with its external environment to acquire limited resources and responding to regulatory changes. C, a bank reorganizing its hierarchy to improve efficiency. D, a bank applying behavioral science to motivate its staff. Yes. Correct. So what is the meaning of system school of management? System school of management means here we are talking about environment. Yes. Now, environment includes your internal, external, both the types of environment here. But remember one thing, while taking any decisions, you need to always check what are the conditions, what are the pastel factors which will influence your factor. So, right answer is answer B here. Yes, adopting mathematical models. No, when we talk about mathematical models, we are talking about quantitative school. Okay. In case of this quantitative school or management science, or one more term is there, that is management science. So this is not the answer. Then bank reorganizing its hierarchy to improve efficiency. No. Applying behavioral science. No. Behavioral science means to motivate their employees. That is also not your answer. Correct answer is answer D. B. Next. The concept of MBO was coined by Peter Drucker. A bank CEO introduces MBO where all officers jointly establish, record and monitor goals for a specific period. Now, which of the following is a limitation of MBO? Yes. Now, you have four options. A. It disregards organizational culture and working conditions. B. It helps in setting measurable and flexible objectives. C. It promotes discipline and foresight among employees. D. It facilitates efficient resource utilization. So, when we talk about MBO, remember this is covered under Unit 2, that is planning. So, we are saying that now management will join their hands with the employees. Both will work together to achieve one particular objective that is also known as goal in some timely framework. This is what given by MBO. So which is the limitation here? Always remember it helps in setting measurable and flexible objectives. That is true. This is not the limitation. This is not the limitation here. It promotes the discipline and foresight among employees. Yes, everyone knows what target we have, what we need to achieve. So this is also true here. It helps you to use efficient resources. Yes, how efficiently we can utilize our resources. That is also true. But it disregards your organizational culture and working conditions. This is your false statement. Means this is your limitation here. This is your limitation here. Okay. So what are the other limitations of MBO? Let's quickly discuss it. First, it disregards the organizational culture and working conditions. Basically, MBO often ignores what is your culture, what is your environmental factors, and directly they are making some laws and regulations or goals without assuming these things. Then, overemphasizes on goals and targets. Again and again, they're just discussing about the targets, goals, objectives, how to implement, how to participate, how to motivate. No one is talking about that thing. Then, neglects operational issues. What problems, ground level employees are facing? No one is taking care about it. No one is trying to resolve it. That is the problem. Inefficient attention to environment during objective setting. Now, when you are creating any, objectives, here you are never going to see about your employees, about the available resources, about the stakeholders, nothing. Just you are setting only profitable objectives. Yes, that is what. Over reliance creates blind spot. We just depend on our we can say only on our this objectives or only our goals, only on our plan, that this will resolve everything. But what actually is happening, no one is seeing that. After implementation, what are the problems? No one is observing that. So all these are limitations by MBO. Yes, next. Pastel analysis is used extensively banks to evaluate external environment. Now the bank studying the impact of RBI repo rate changes, inflation, GDP growth on its lending strategy specifically deals with which type of pastel factor? A, B, C, D. Political, socio-cultural, economic or legal. Yes. If we talk about pastel, Hana, so what is the full form of this? P means political, E means economy, S means social, T means technology, L means legal, E means environment. ठीक है. Political means all government schemes, trade tariffs and all. ठीक है. Economy means about GDP, about inflation, unemployment, all these things. Social means about the religion, culture, language, yes, celebration, festivals and all. Then technology means AI, softwares, yes, that is what. Legal means all the regulatory norms and all. Environmental means how to save our environment. Okay, issuing green bonds, establishing sustainable projects and all. So this is about pastel analysis. So as per the given question, they are saying the bank is studying the RBI repo rate, then here inflation, GDP growth rate, all these things are going to be part of economic factors. Yes, right answer is going to be answer C. Political factors means about the schemes, all the you can say norms which are issued by the government. Then social culture, religion, culture, all these things. Legal factors about some regulatory norms that is given by RBI or SEBI or these things. So that is. So here right answer is answer C. Arrange the following steps of the planning process in in a correct sequence. Sorry. First, that is selecting the best alternative. Then second, developing planning premises. Third, opportunity analysis. And fourth, talking about evaluating alternatives. Yes. Now, yes. First, we need to search for selecting the best alternative. That is not the first step. Evaluating the alternatives. No. First, we need to identify the opportunities. Yes, what are the opportunities do we have? That is the first thing. Now, first we need to talk about our goals. Now, whatever our targets we can set. Based on this, you will talk about the planning premises. Yes, here we will be talking about then the planning premises. Planning premises means your environment, which type of environment you require if you start any business to achieve the goal. So first is your planning premises, then second is your developing the first is opportunity identification, developing premises, then after that identifying the alternatives through which you can achieve your goals. Yes, what are the ways? Then last is selecting the best alternative after doing the cost analysis, profitability and all these things, income generation, all these things after your selection of this alternatives. After identifying all these factors, which is the correct alternative or best alternative for you that you are going to select. So right answer is answer A here, not B, C or D. Yes. Next. A regional bank's zonal head is conducting an environmental analysis. Now, which of the following accurately describes developing planning premises in the planning process? Yes. So, planning premises means what? A. Determining availability of various means to attain goals. Collection of future forecasting derived assumptions based on realistic assessment of the environment, including forecasting basic policies and existing plans. C. Reviewing the final plan and adjusting as required. D. Identifying and grouping activities into departments. Yes. So basically, when we talk about planning premises, that is how we are going to collect the future assumptions. Yes, what type of policies we want, how we are going to run our business. That is what we are discussing in this. So right answer is answer B. Correct. Then, in a bank, the HR department, legal department and compliance department provide specialized advisory support to branch management but do not issue direct commands to branch staff. Now, branch managers hold direct operational authorities. Now, this describes which type of organization? Yes, A, B, C, D. Committee, functional, line and staff, and decentralized one. So here when we talk about different departments, okay, as per their specialized advisory support to branch manager, but they are not taking any issue direct commands to branch staff. So that is going to be again read this question. See, this is one scenario based. They are saying there is a one bank. Taken out in bank, you have an HR department, you have one legal department, you have compliance department. Now what they are doing, they are providing specialized advisory support. They are providing you the support. Okay, they are providing you the support, and here to branch manager. Okay, branch manager requires all the information, how to do it, what to be done. Yes, basically they are providing you expert services. They are providing you expert services. Okay, but along with this expert services, they are not able to give any command. They are not allowed to give any command. These are some experts sitting in HR department, legal department, and compliance department. But they are not giving you any command. They are not at all allowed to do or take any day-to-day activities. So that is, so the branch manager holds the direct operational authority. Means here, branch manager is involved in day-to-day activities. They are taking the final control. They are taking the final authorities and all. So, this describes which type of organization. Committee. Committee means one special committee you have created, like you want to resolve one fraud. Okay, that is one expert committee. So, this is not a committee organization. This is not a committee organization. Okay, next, functional organization. Of course, when you are dividing your organization based on the groups, okay, based on the departments like HR only, okay, then finance department, sales department, marketing department. When you divide your organization based on this, then that is functional. But if you see centralized organization means single person holds all the power. Okay, like when kings and emperors used to rule. That is what. So answer is not D. Now here one more option is there, that is line and staff. Now who are line members? They are doing day-to-day activities. Yes, day-to-day activities. But if you talk about the staff, they are providing you some, advisory services. They are providing you advisory services. They are providing you support. Now tell me, as per this given, scenario, what do you think? Which is going to be your correct answer here? If you're saying functional, then if just by seeing this names, HR department, legal department, compliance department, if just by seeing these three things, if you're giving the answer, then your answer is functional organization. Then your answer is correct. But here your answer is not functional. Why? Because now you need to read this line. Here, these three departments are providing you specialized advisory support. They are providing you specialized advisory support. And who is taking the final decision here? Here, this branch manager is holding all the operational authorities. That is the reason correct answer is not B. Correct answer is answer C. Okay. So please read this full scenario first. Try to understand what they are talking about. If they talk about only HR, finance, marketing, sales, and legal, compliance, if they are talking about this only, then yes, your answer is functional. But if from this department, if any person is giving, let's say, expert services, so that is not at all functional organization, then that person will become expert. Yes, because they are not giving direct instructions to work like this. They are not giving any command. Yes, unless and until they are not giving the command, they are staff in your organization. So right answer is going to be answer C, line and staff. Okay, so please everyone remember this point. Here right answer is answer C. Yes, I hope this point is clear. Now next, a bank's HR team is managing its annual hiring cycle, which includes determining the need for hiring, drafting job, screening, conducting interviews, background checks, onboarding. Now this entire cycle is a part of selection, training, recruitment or performance appraisal. Now, in this particular question, we are talking about here your HR team. Yes, here we have an HR team who is working in your bank. Now, what they are doing on annual basis, annual hiring cycle is there. So, before the hiring, they are talking about the need for hiring, why we require any person. They are talking about the job, JD, that is job description. Then, about the applications, how they will be collecting the applications. Yes, about the interviews after collection, how interviews will be going on, background checking, onboarding. So this entire cycle is about recruitment. Correct. Okay. After recruitment, they go for selection. Okay. This is the second step. This is the second facet of staffing. In selection, interviews, yes, HR round, final round, some you can say medical checks are also there, background checks are also there. So that is selection. And finally, when you are providing training, so training are of two types, onboard training and off, like you are going for workshops, seminars and all this. Okay, off training and on the board training. So here right answer is answer C. Okay, next. Now consider the following statements about the selection process. Statement 1. Selection involves choosing an employee from a short list of exceptional applicants. Statement 2. Selection process begins with a formal interview and ends with preliminary interview. Which is correct here? Now, very easy one. Now, when we talk about the selection process and staffing, that is one negative factor. Why? Because we are eliminating here. Okay. When we talk about recruitment, that is a positive factor. In our yesterday's session, we discussed types of recruitment also. Okay. Now, in selection process, it involves choosing an employee from shortlisting of exceptional applicants. That is the reason it is negative factor. Okay, selection is negative factor. So this statement is true. But selection process will not begin with a formal interview. First, they will do the preliminary interview, but quick interview. That is what they are doing. And finally, they will call you for the formal interview, then some written test, aptitude test, and then medical test. And finally, they are going to give you the appointment letter. So that is the whole process. So here right answer is both are right, no. One is incorrect, no. Both are incorrect, no. Right answer is answer B. Answer is B here. Yes. Next. The CC model in knowledge management includes 4 components. A bank store manager writes a customer service guide documenting how to handle common situations like complaints or product returns. Now, this corresponds to which component of the CC model? What is the full form of CC model? Socialization, combination, internalization, and externalization. Now, this was asked in your PYQ. Yes, and in a case study format they asked. So now let's talk about the CC model. So first is socialization. Now, what is the meaning of socialization? When you are joining for any internship, so that is work shadowing. You are working under any one senior person and you are following their instructions and you are learning from them. So that is what socialization. So this is also known as work shadowing that you are doing in case of internship. Okay. Next is externalization. Now here your manager, your senior will write a customer service guide that explains how to handle common situations like complaints and product returns. So here they are preparing FAQs, frequently asked questions. We have now FAQs, that is what. Then next is combination. So store manager combines the sales data, customer feedback and market trend to create strategy for improving sales. So combination means adding all the data from customers, from the sales team, from the marketing team, and then they are preparing one strategy. That is combination. And internalization means when finally now you are handling all the work. Okay. Like initially when you entered into the bank, first you were in probation period. Yes, you were taking all the internship, all the training from your seniors. After learning all the things, FAQs, you understood how to solve the queries of your customers, how to prepare the strategy. Now you are doing your own work. Okay. So now when you started your own work, that is internalization. That is internalization. Yes. So now tell me, here we are talking about which factor? That is, yes, externalization. Okay, I hope now you understood this SACE model: socialization, combination, internalization, and externalization. Yes, chaliye. Next, a bank offers its 10-year employees retention bonuses and links defined benefit plan payouts to years of service. Now, as per retention strategy, this falls under which retention practice? Shows socializing possibilities, compensation, rewards, fair supervision, or employee involvement. When your banks or any company is giving you some bonuses, that too retention bonus, means they want to continue with you. So that is what compensation and rewards. That is answer B. Correct? Now next. Directing refers to instructing, guiding, counseling, motivating, leading people in organization to achieve objectives, goals. Now, which of the following characteristics of directing is incorrectly stated here? Now, we need to identify here false statement. A, B, C, D. A. Directing is the initiator of action in management functions. B. Directing is the all-encompassing function present at every level. C. Directing flows from lower levels to higher levels of management. Or D. Directing is a constantly occurring activity. It's a very direct question. Yes. So when we talk about directing, we have 4 elements also in this. First is leadership, then motivation, then communication, and then supervision. Yes. Now in this, whenever we are talking about the direction, that goes from higher level to lower level. Okay, not lower to higher. Top management takes the decision and then it will be carried forwarded to lower level. So right answer of this question is answer B. Rest of are the functions, or you can say definition of your directing. Next. A branch manager makes all decisions alone, issues strict instructions, tolerates no deviation from his order. Now, team members are not consulted. So, tell me, the leadership style is best described here: participative, delegative, authoritarian, or transformational. So see here, branch manager is taking all decisions, and issues, restrictions, also rules, regulations, everything is taken by branch manager only. Okay, and this branch manager is not involving any team member. So that is of course going to be authoritarian or autocratic leadership. Right answer is answer C. But participative means what? Participative means when you involve team members. Okay, that is what participative. Delegative, also known as laissez-faire. This was asked in your PYQ. Yes, now when you know that your subordinates, yes, or you can say when your juniors, they are having, sufficient, or you can say enough understanding of your working, they are experts, yes, they have enough knowledge to deal with the situations, then what you are doing, you are transferring power to your juniors. So when you're transferring power to your juniors, that is delegative or laissez-faire leadership. Then last is transformational leadership. Transformational leadership means when you are guiding them, motivating them, like a motivational guru. They are transforming us. So that is what transformational leadership. So here right answer is answer C. Next. A bank's new MD encourages all employees to participate in policy formulation, organizes open house sessions, and values inputs from all levels. Now, this is an example of what? Yes. So when your bank involves all employees to participate, that is going to be yes. Correct answer. Answer B, that is participative or democratic leadership. Please everyone remember all these alternate names also. In exam they can ask you democratic leadership, laissez-faire leadership, yes, autocratic leadership. So these are some terms they can use in exam. The right answer is answer B. Authoritarian, already we discussed, when single person holds all the power. Delegative means when you know your subordinates, your juniors are having expertise, knowledge, you are transferring power to them. Decision making power you are transferring. That is what. Transactional leadership ship means when you are rewarding them. Just because they are listening to you, if they are achieving the targets, you are going to reward them. That is what transactional leadership. Right answer is answer B. Next. A bank implements a reward scheme where officers who exceed their loan disbursement targets receive performance bonuses, and those who fail are placed on a performance improvement plan, that is PIP. Now, this approach reflects which leadership style? Transformational, delegative, transactional, or participative? Even in your bank also, when you are getting the targets and if you don't achieve it, you fall under PIP. Yes, that is what? Yes, that is transactional leadership. Yes. Basically, when you receive the targets and if you achieve the target or if you exceed the target, you will be getting the rewards, commission, promotion, increments, incentives, all these things. But if you are not able to achieve it, those targets, then PIP, in performance improvement plan, will be there for you. Yes, correct answer is answered. See, that is transactional. Now we know what is the meaning of transformational. That is through motivation, you are going to change your juniors. Delegative, when you know your juniors are having sufficient expertise, knowledge, that is delegative. Then participative means involving all members in your decision making. Okay, chalo. So let's take one break now. Yes, let's take one 15 minutes break. Current time is 8:25, so let's start our session around 8:40. Yes. So quickly you can have your dinner and please don't take any extra dinner. Okay, otherwise you will feel sleepy. Yes. So again we will be continuing this session. So you can take your break for 15 minutes. Okay. And this session will be continuing in in this particular channel only. We have this session up to 10 p.m. So please come fast, and as soon as you join your session, please tell me that yes, you are back. Okay. Okay. Hello everyone, I hope you all are back. Hello everyone, please confirm me once if you are back. I will share this PDF after the session only, sir, because I will be sharing with annotations, Hana, so that you can utilize this PDF with solution also. Okay, so let's start this session. Let's continue with the next question. Now, Elderford's CRG theory of motivation modifies Maslow's hierarchy into three categories. That to ERG stands for in this model. Yes. Efficiency, relatedness, growth. B. Existence, relatedness, growth. C. Existence, recognition, goals. D. Efforts, reward, and gratification. How we classify this ERG as per Elderford's model? Remember one thing, Elderfors derived this ERG theory from Maslow's hierarchy. Yes. So what is the full form of it? A or B? A or B? Just wait one moment. Just one. Yes. So here, right answer is here. Answered B. That is existence, relatedness, and growth. Okay, that is not efficiency, relatedness, and growth. That is about the existence where we talk about our basic rights, correct? Where we talk about our food, water, shelter. That is what existence. Then relatedness, where we talk about social relationships and belongings. And growth is where we talk about self-development and personal growth. So right answer of this question is answer B. Yes, next. A senior bank officer is highly competitive, seeks positions of authority, participates actively in debates, and is assertive and practical. Now, he derives satisfaction from influencing colleagues. According to here Macklin's needs theory, this officer is primarily driven by which need? Need for achievement, need for affiliation, or need for power, or the existence need. So when we talk about Macklin's need theory, we have only three types of needs as an individual. Okay, that is need for achievement, need for affiliation, need for power. Now, when we talk about the need for achievement, we are talking about that we want to achieve some goals. Here we are talking about our goals, our objectives. Okay, so that is what an arc. Need for achievement, need for affiliation. That is what we, as per this and affiliation, we want society, we want family. Okay, we are discussing about society, family. Then and power means when we talk about, you can say, let's say here when we talk about politicians, without their power they cannot rule. Without their power no one will listen to them. So if you see here, we are talking about your position. Here we are talking about your position. You're influencing power for others. Yes, how leadership, what leadership you are performing and how you are influencing others. That is what power means. Yes, so that anyone can listen to you. So if you read this particular scenario, senior bank officer, he is highly competitive because of his position of authority. He participates in so many activities and he derives satisfaction from influencing colleagues. Yes, so basically he is performing which type of a need? Here, need for power. That is your right answer, answer C. Okay. Now, next. Statement 1. Intrinsic motivation involves doing an activity for its inherent satisfaction rather than for some separable consequences. Statement 2. Extrinsic motivation is defined as motivation based on meeting an external goal, garnering praise or receiving an award or payment. Then statement 3. Intensity, perseverance and conformational changes are the three primary components of motivation. Yes. How we define this motivation? So always remember this motivation. Three components are intensity. Yes, intensity means the level of energy, enthusiasm, that dedication we have to achieve our goal. That is intensity. Perseverance means even after doing, about the hurdles, about the problem, then you are also proceeding with that. Like, when you started JIB, CIB, you were aware about, hurdles that you are going to face. Time management, syllabus you are not able to complete. All these things were the hurdles because of less time. So perseverance. Then also you prepared for JIB and now CIB. And last is conformational. Yes, conformational means the decision you are going to take. Okay, to select any one particular goal. That is what conformational changes. So these are the three components of motivation. So this is true. Now, extrinsic motivation is defined as motivation based on meeting an external goal, garnering praise or receiving award or payment. Extrinsic motivation means which you get outside, from outside. When you are getting appraisal, when you are getting increments, promotion. Yes, here everyone is talking about your goodwill and all these things. So that is what extrinsic motivation. So this is also true. But intrinsic motivation involves doing an activity for its inherent satisfaction rather than focusing for some separable consequences. So here we are talking about that when you are working for your own, okay, means you are self-motivated. You want to achieve the task. That is what intrinsic motivation. So this is also correct. So right answer is going to be answer 3. All three statements are correct. Yes. Motivation components are intensity, perseverance and conformational. Please check once this topic. So right answer is answer D. A bank's compliance department studies industry trends and government regulatory announcements to anticipate potential issues before they occur and builds risk mitigation and strategies accordingly. Now, this is an example of feedback, concurrent, proactive, or personal observation. Now, when we talk about control means what? In your planning, you first talk about your targets, about your standards that you want to achieve. Then these standards and targets you will compare with the actual working that you have performed. So if you see this comparison, you will find some deviations. Okay. Deviations mean some differences. And if these differences are in negative side, then you will take some corrective action to correct it. Yes. Now, the bank's compliance department studies industry trends and government regulatory announcements and anticipate potential issues before they occur. So what we are doing here? Here basically we are studying the market, we are studying the industry, we are studying our competitors, so that whatever mistakes they are doing, we will learn from that. Before implementing any particular compliance in our organization, let's review other organizations, competitors, so that the same mistake we won't be repeating here. So that is what, before we proceed for any working, if we take any precautions, that is what proactive control. Yes, that is not personal observation. Now, when we talk about types of control, we have proactive. Before starting, going for the activities, whatever control you are taking, that is proactive. Concurrent means it's like learning by doing. Learning by doing. So you are doing the work, and if any flaws or any hurdles are there, you are correcting it at that time only. So that is what concurrent. Feedback means after completion of your work. So here we are not talking about feedback or B or D. Right answer is yes, very good answer, C. Next, ROI as a modern control technique is also called PERT method, DuPont method, or CVP analysis. You know, this DuPont word was asked in your PYQ. So tell me. Here, ROI as a modern control technique is also called DuPont method. And ROI is also known as DuPont method here. Now, if we talk about ROI formula, that is your net income divided by sales into sales divided by total investment. Yes, this is the formula that we need to apply here. ROI formula, or you can say DuPont method. Yes, chali, coming to the next one now. A bank's critical technology project has multiple interdependent activities with uncertain completion times. Now, the project team uses a tool that shows all activities, their sequence, uses time estimates with ranges: optimistic, pessimistic, and most likely. So, this technique is CPM, that is critical path method, B, break-even analysis, C, PERT, that is program evaluation and review technique, which is also known as your PERT, and D, MIS. Okay, program, or sometimes they are also writing performance evaluation and review technique. And for P, they can use any word, program or performance, both means the same thing. Or DMIS. So here, first of all, if we talk about the simplest term, that is break even. Break even means no profit, no loss point we are going to calculate here. But as per the given question, we are not talking about any such situation where we have no profit, no loss. So you can eliminate it. This MIS is about your information systems. Okay? Basically, we are talking about management information system. Nowadays, everyone is using softwares to store all the information rather than maintaining every detail in, you can say, a manual format. So that is also not your answer. Now, let's quickly talk about PERT and CPM. So right answer is here, PERT. Correct. Right answer is answer C. But let's quickly understand about PERT and CPM. Remember, in previous attempt, they asked the full form. So full form is also very important. Yes. PERT means program or performance evaluation and review technique. CPM means critical path method. Now, nature. Here, PERT is having the probability nature. Why? Because here we are estimating our three different situations. Optimistic means totally positive situation. When the best thing happened with you, that is optimistic. Okay. Most likely means you can say base, or that is your normal situation. Pessimistic means when everything is going to be worst for you. Okay, pessimistic, totally negative. That is what pessimistic. Here what we are focusing, we are focusing on time management. How to manage our time, because we are talking about one new and non-routine project. This is not our regular activity. This is something new which we are starting for the first time. So how much time or duration is required, that is totally uncertain. That is not at all predefined. Suppose in your organization, when you first adopted this IT software, so from manual to IT, how to shift it and how much time it requires, no one can calculate it, because that is the first time you implemented your softwares. So that is what PERT talks about. But when we talk about CPM, that is quite opposite. Okay, that is critical path method. Here we know what we want to achieve. One single time estimate we want to understand here, and we learn about time and cost management. Now, most of the time here we are discussing about repetitive routine projects, which is in your repetition, like updating your softwares. Now, after implementation, you can see monthly updates are coming in your phone or in your softwares, in your laptop. So that is now routine work. And you also know it, hardly it will take 5 to 10 minutes. So that is what CPM here. Correct? चलिए, so if you read this particular question, they are saying that bank's critical technology project has multiple interdependent activities with uncertain completion time. No one can tell about the completion of time because this is the first time when you're adopting it. So the project team uses a tool that shows, different sequences. Means after adopting this particular IT technology in your company, in your bank, what best thing you can see, what is the normal and you can say base situation you can see, and what is the worst situation that you can see after implementing this. So this is what given by PERT. So right answer is PERT and not critical path method. This is not CPM. And please remember, this is very important. Full form definition, yes, from controlling unit. Next. In a bank's leadership development program, participants are evaluated on vision, foresight, intelligence, communication, knowledge work, sense of responsibility, and self-confidence. So these are collectively referred to as what? Elements of directing, characteristics of controlling, leadership qualities or functions of staffing. How you are going to classify this? Clearly, if you read this question also now, this scenario based question, they are giving hint in your first line only. Okay, they are saying in a bank's leadership development program, participants are evaluated on vision about the future. Yes, how they are planning about or how they are forecasting, how intelligent they are. Yes, how they are communicating. Yes, whether they are clearly communicating or what type of communication they are following, about the work knowledge they have, sense of responsibility and self-confidence. So all these qualities we want under a leader. Okay, so this is about leadership qualities. Correct answer here is yes, answer C. This is not elements of directing. Under elements of directing, we talk about leadership, motivation, supervision and communication. These are not characteristics of controlling also. These are not functions of staffing. Right answer is answer C. Very good. Next. A bank's project for implementing a new core banking system is nearing completion. Now, post-implementation review reveals several deviations. Now, the control mechanism that compares actual performance against predetermined standards after the activity is completed for use in future similar activities is concurrent control, proactive, feedback or budgetary control. Now they are saying when you are starting a bank project, that is your new banking core system, that is CBS. After completion, means post completion, your review reveals several deviations. Means after implementing this CBS in your bank, you went for the feedback, you went for the review. Now the control mechanism that compares your actual performance against the predetermined standards after the activity is completed. After completion of activity, when you are controlling, then that is known as feedback control. There is no such term given under your controlling, that is budgetary control. That is not a budgetary control. Yes, right answer is answer C. Now you know what is concurrent and proactive, so I'm not repeating it again. Next. A bank manager believes his staff are self-directed and creative at work if motivated properly, and that people have capacity to exercise imagination and creativity. Now, this manager is applying which management theory? Theory X, Y, Hedgeberg's hygiene theory and ERG theory. Just we discussed about ERG theory, where ERG is derived from Maslow's hierarchy, Maslow's theory. So this is not ERG1. Now when we talk about Hedgeberg's hygiene theory, we have two parts. One is motivation and next one is hygiene factors. So motivation you get, yes, when there is some, you can say promotion, there is some incentives, when there is some rewards. Yes, all these things leads to motivation. But when we talk about hygiene factors, means your basic rights. Basic rights like salary, ठीक है, your leaves, ठीक है, your let's say some perquisites, ठीक है, all these things which are your basic right, ठीक है, safety, PF amount and all these things. That is hygiene factor. So are we talking about related to anything motivation or hygiene in this question? No. So this is not your Hedgeberg's hygiene theory. Now, when we talk about two factors theory, that is X and Y. X talks about negative factor, about employees, they are very lazy, they are not ready to work. So that is what theory X. But here in this question, manager believes that their staff has here self-directed and creative at work. You know, staff is very, you can say, innovative, they are very creative, they are self-motivated. That is what given by theory Y. All positive factors of your employees. So right answer is going to be answer B here. Okay, this is not Hedgeberg's hygiene theory, correct? Right answer is answer B. Next. An experienced senior manager delegates key assignments to team members based on their qualifications and experience without closely monitoring their daily activities, encouraging creativity. Now, this leadership approach is best described as authoritarian, transformational, transactional, or delegative. Delegative is also known as laissez-faire. See, if you read this question, they are saying an experienced senior manager, okay, manager delegates key assignments to team members based on their qualification and experience. So these are the key terms that your subordinates, your juniors are qualified and experienced. That is the reason they are getting some power, and that is what delegative and laissez-faire. Okay, so right answer is answer D. Please remember this term is very important, that is laissez-faire. Okay. This is not authoritarian, transformational or transactional. Already we discussed. Transactional means when we talk about rewards. Okay, transformational means like motivation, and all. Authoritarian means single person is holding all the power. Next. In the MBO process, which of the following sequence is correct? Now this was asked in your PYQ about MBO sequence. Employee objective, organizational goal, monitoring, evaluation, feedback, appraisal. B, organizational goal, employee objectives, monitoring, evaluation, feedback. C, appraisal, feedback, evaluation. First, how you are going to give the appraisal? First, you need to give the target. Now, yes, in banks also, first you are getting the target. And before you receive the target, first organizational goal will be decided. And what your bank wants to achieve. First, organizational goal will be defined, then individual targets will be given, how each person will contribute or how each employee will be contributing, and then after implementation, yes, you are going to monitor the performance, whether you are able to achieve it or not. Yes, you are going to compare both the things, and if yes, you have achieved a target, then yes, you will be getting the appraisal. So this is the flow. So appraisal and feedback is not the first step that you will be starting. So employee objective is not the correct answer. Correct answer is answer B. First, what your organization wants to achieve, that is the first thing you need to define. And not what an individual wants to achieve. No one is listening to any employee's agenda. As per organization agenda, we are preparing our own targets. Correct? Chaliye. So correct answer is answer B. Now, which of the following statement correctly distinguish between management audit and internal audit? A, B, C, D. Now you need to tell me here, like which particular option will means distinguish between management audit and internal audit. Now both are continuous affairs with the same periodicity. No, this is not correct. Okay, this is not at all correct answer. Now management audit is daily while internal audit is annual. No, management audit is not at all daily purpose thing, something like that. Internal audit focuses on management performance while management audit focuses on financial transactions. No. Right answer is going to be answer B. Management audit started by top level management, of course. Top level management is means we are going to do this audit on top level management about how they are taking the decision making, how performance they are evaluating. Yes, and in every 2 or 3 years we are going to perform this. Internal audit is a continuous affair with periodicity depending on organization size. Yes. So here right answer is going to be answer B. Yes. Next. Now, which of the following correctly describes Adams' equity theory of motivation? A. It focuses on the need for existence, relatedness, and growth. That is what ERG, na? So we are not talking about now ERG. Then B. It proposes that individual needs are learned over a lifetime. C. It suggests that employees compare their input-output ratio with others and seek fairness. And D. It starts that rewards lead to performance, which leads to satisfaction. So as per Adams' equity theory of motivation, we are talking about one weighing machine. Take it like how much you are contributing. Yes, like if I talk about you, take it like in your bank you are contributing. Take it, you are giving your 100%. You are working timely all the functions and you are achieving your goals. Even you are doing overtime. But what if you are not getting your salary on time? What if you are not getting any leaves? What if your bank is not motivating you? What if they are not supporting you? So are you going to feel satisfied? No. Motivation means how you will be feeling satisfied. So here, if you are not receiving or if you are not compensating, if your bank is not compensating equal to your hard work, of course you will feel demotivated. So as per Adams' equity theory, we talk about one weighing machine. How much input you are giving to your bank, in return, are you getting that much output or not? That is what Adam tells here. To maintain both the sides, then only your employees will be satisfied. So this is what given under option C. Okay, no lifetime, no rewards. We want to balance both the sides of weighing machine. Yes, chali. Now coming to next one. IT general controls, that is ITGC, include which of the following areas? Computer operations, access to programs and data, program development and changes. Fourth, physical infrastructure of branches. Which are correct here? 1, 2, 3 only, 1 and 4 only, 2, 3 and 4 only, or D, all of the above. So when we talk about ITGC control, computer operations are followed here. That is the one thing correct. Here we are checking our programs and data, how we are applying it, how data we are maintaining, confidentiality, everything. Then program development changes also. Time to time, after RBI notifications, how we update our programs and all these things we maintain here. But physical infrastructure branches, that is not we are talking here. So right answer is answer A. That is 1, 2, 3. Next. TQM and learning organization are concepts associated with which school of management? Yes, classical or traditional school, neoclassical, quantitative or contemporary school of management. Now this one is easy one. See, classical or traditional school where employees were equal to machines. No motivation, nothing. So we are not talking about this. Neoclassical or behavioral school where we are focusing only on this motivation side of employees. And here we have different methods like Maslow's hierarchy of need, how individuals are satisfied. Yes, what are their hierarchy flows. Then X and Y theory, and apart from this, that hygiene and motivation factors. Okay, so these are the three theories under neoclassical or behavioral school. Then quantitative school. Here we are using some statistics or we are using some mathematical tools to measure, motivation and to measure some management work. And this is also known as management science. So we are not completing this TQM and learning organization in this. Right answer is Contemporary School of Management. Now in modern time, how management takes the decision? They are talking in MBO, Management by Objectives, or in Learning Organization. Yes, so right answer is answer D. I'm sorry, not MBO. This is TQM. Sorry. Okay. TQM and Learning Organization. Right answer is answer D here. Then, a bank's risk management department prepares comprehensive written risk assessment frameworks based on actual risk events from the previous year and presents them to the board. Later, the branch staff are trained on these frameworks and start applying them in daily operations. Which complete sequence of the CAIIB model does this illustrate? A, B, C, D. Just we discussed in today's session. Yes, first, what step you will be taking? First, you will be going for internship. Hana? First, you will be doing the work shadowing. First, you will learn from your seniors. That is what socialization. After that, your seniors will prepare one guidebook. Hana? That is what externalization. Combination means now that seniors will be by seeing different you can say information, they will be creating goals, objectives, and finally when you are going to work after learning, after reading FAQs and everything, then you will be taking care and now you will be dealing directly with the customers. So that is what internalization. So right answer is no. Answer is A. Correct sequence is CAIIB model. Here's the CAIIB model. Correct? Socialization, externalization, combination and internalization. नहीं, एक कॉफी कर दीजिएगा. हाँ. नहीं, अब ठीक है, रहने दीजिएगा. एक मिनट. Yes. So here, correct answer is answer A. Remember this shortcut we discussed, na CAIIB model. Take it. Sorry. Coming to the next one. Okay, now we have a numerical question. So the following information is available for two companies. No, Bhaskar sir, please refer in our today's session only. We discussed about this. No. We discussed about this. So it's a request to please rewind the session and please refer about this CAIIB model. Okay. So the following information is available for two companies, MNP Limited and SRM Limited. So we have MNP Limited data and SRM Limited data. Sales, variable cost, fixed cost, equity, borrowing, tax rate. Calculate the degree of financial leverage of company MNP. Yes. So now when we talk about financial leverage, what is the formula of it? DFL is equal to EBIT divided by EBT. Yes, EBIT divided by EBT. So we need to calculate for which company? MNP Limited. So what is the formula we are going to apply here? Sales, that is equal to 13,000 into 210. 13,000 into 210, that is 27 lakhs 30,000. Then we have some variable cost. Okay. So if we reduce the variable cost, we will be getting contribution. So minus 30% of variable, you will be getting 19 lakhs 11,000 as contribution. Minus fixed cost. Yes, that is going to be 9 lakhs. Minus 9 lakhs. So this is going to be 10 lakhs 11,000. This is what? This is EBIT. Earning before interest and tax. Minus interest. Yes. So what is it here? Interest value, that is going to be 9 lakhs into 10%. That will give you 90,000. So 90,000 if you reduce here, you will be getting EBT equal to 9,21,000. Okay, so EBIT 10,11,000 divided by EBT 9,21,000. 10,11,000 divided by 9,21,000. This will give you 1.097. Okay. You can do round off also. That is going to be 1.098. Yes, this is about DFL. Next, here calculate the degree of operational leverages of company SRM. So for SRM company, we need to take DOL. What is the formula of DOL? Contribution divided by EBIT. Okay. So let's start with the sales value here. 10,000 into 190. 19 lakhs minus variable cost will give you contribution minus 50%. 9,50,000 minus fixed cost, that is going to be 6,50,000. So what is your EBIT? 3 lakhs. Yes. So contribution equal to 9,50,000 divided by EBIT, that is 3 lakhs. 9,50,000 divided by 3 lakhs. 3.167. Yes, this is your DOL. Now, coming to the next part of this question. Okay. Now, what we need to calculate? Degree of combined leverage of SRM. Okay. So, what we need to calculate? DCL. Another formula is DOL into DFL. Already we calculated operating leverage, that is 3.167 into DFL. Now we need to calculate, that is going to be EBIT divided by EBT. Correct. So if I subtract from this EBIT interest value, that is going to be again 90,000. So EBT is equal to 2,10,000. 3 lakh minus 90,000, 2,10,000. So 3.167 into EBIT 3 lakhs divided by 2,10,000. So your final DCL, that is combined leverage, is 4.52. Okay, so this is your combined leverage answer. Yes. Wait a moment. Okay. Now, next thing we need to calculate here, that calculate the EPS of company MNP and SRM. What we need to calculate now? MNP's EPS and SRM EPS. So till EBIT, if I talk about MNP and SRM, okay, we calculated up to earning before taxes. So MNP value, EBT is 9,21,000. 9,21,000, and SRM value is 2,10,000. 2,10,000. Now from this we need to reduce tax rate, tax amount, that is at the rate 30%. So 9,21,000 minus 30% if you do, that will give you 6,44,700. So this is earning after tax. Similarly, if you reduce 2,10,000 minus 30%, that will give you 1,47,000. Yes, 1,47,000. Now, as in this question, there is no preference dividend. So, we are not going to subtract any preference dividend part. Directly, we are going to divide with number of equity units. So, here if you see, they are saying 9 lakh is your total. You can say this is your equity. Okay. And total value is 9 lakh and each share is equal to 10 rupees. So what is your number of shares in case of MNP? 9 lakhs divided by 10. This is going to be 90,000. And here SRM 8 lakhs divided by 10. So that is going to be 80,000. Divide with 90,000 shares and 80,000 from SRM. So that is going to be 644,700 divided by 90,000. That is earning per share. Oh, sorry. Earning per share 7.163 and here 147 divided by 80,000. So that is 1.837. Please cross check this. Yes. Hannah, so this is your earning per share and this is how we need to calculate. Yes, what is the formula of EPS? Let me write over here. That is earning available to equity shareholders. Equity shareholders divided by number of equity shares. Okay, this is the formula. Chali. Next. What kind of merger takes place when two companies whose lines of business are completely unrelated to one another and have nothing in common but decide to join forces? 7.163 and 1.8375. Correct. Chali. Now tell me. So horizontal means what? Horizontal means same industry. Hana? Reduce competition. To reduce competition, they are coming together. Yes. Now, after that, when we talk about conglomerate, conglomerate means when we are combining two unrelated companies. Okay. Then amalgamation. Amalgamation, we have so many types. Okay, like you can go for takeover, merger, acquisition, and all. Then we have vertical integration. So vertical integration means when you are joining your workforces in supply chain. Yes, so that is what vertical. So here you can see, as per the question, they are saying unrelated companies. So right answer is answer B. Yes, easy and direct. Okay, next. When a company applies to the NCLT for amalgamation, in case the merger involves a domestic company and a foreign company. Now, prior consent must also be obtained from SEBI, Stock Exchange, RBI, or Ministry of Finance. So, basically, you need to comply with so many laws and regulations. Yes, so here, if you are merging with one foreign company and Indian company, then you need to take approval from which particular here regulatory body, SEBI, Stock Exchange, Reserve Bank of India, Ministry of Finance. So remember one thing, always when you are applying to NCLT, okay? So NCLT will give you the permission to go for this mergers and all, but if this is your cross-border, merger, like here, foreign plus domestic company, this is your cross-border transaction. Okay, this is a cross-border merger here. So in case of cross-border merger, you need to take one more approval from RBI. Correct answer is yes, RBI. Okay, not SEBI. SEBI full form is only Securities and Securities and Exchange Board of India. That is what stock exchange is, and not directly Ministry of Finance right now. Okay. So right answer is answer C. Now, for a scheme of amalgamation to be approved in the meeting of shareholders, it must be supported by at least 51% of shareholders present in voting, 2/3 of shareholders present in voting, 75% in value of shareholders in voting, proxy or postal ballot, or the approval of all shareholders. That should be in unanimous. So remember, when you are going for amalgamation, you need to take 75% in value. Okay, value means in what amount. Okay, not in number of shares. We want in value. So 75% needs to be in value. Okay, let's say my company total amount is 100 crores. So I need to take at least 75 crore shareholders approval. So in amount, we need to take the permission. So that is what 75. Correct answer is C. Then, for an amalgamated company to enjoy tax benefits under Income Tax Act, which of the following conditions must be satisfied? Yes. Correct. Then NCLT is enough for you. Okay. For an amalgamated company to enjoy tax benefits, then which conditions must be satisfied? A, B, C, D, at least 75% of the shareholders of the amalgamating company must become the shareholders of the amalgamated company. Okay. Amalgamated company means this new company that you are forming. Amalgamating company means which is actually merging with the one more company. That is what amalgamating company. So remember, at least 75% shareholders of your, you can say, target company should be a part of, amalgamated company. Even after amalgamation, they must hold some ownership in that company. Then all assets and liabilities of amalgamating company must become of amalgamated company. Okay, you need to transfer all your assets and liabilities to these companies. Then the amalgamating company must be an Indian company. Yes. So when we are talking about target company, this company should be an Indian company. Yes. So you need to comply with all of the above. Right answer is answer D here. Next. Company X acquirer has a BVPS, that is book value per share, of rupees 30. While company Y, that is target, has a BVPS of 60. Now, if the acquisition is based on BVPS and company Y has 1 crore shares outstanding, so how many shares will X issue here? Yes, tell me. So first you need to calculate here, that is exchange rate. Yes, now we need to calculate here exchange rate. So what is the formula that you are going to apply here? Exchange rate means if you are purchasing any company by issuing your shares, that is what exchange rate, that is what swap rate. Swap ratio, exchange ratio. Okay, so the formula is BVPS of acquirer divided by book value per share of target. Yes, this is the formula. Correct. Now, here BVPS of acquirer is equal to 30 divided by target company BVPS is 60. So 30 divided by 60, that is going to be 0.5. So if the acquisition is based on the BVPS, company Y has 1 crore. Okay, so here company X is acquiring Y. Yes. So if anyone is holding 1 share of Y, they will be getting 0.5 shares of X. Yes. So this is going to be 0.5:1. Yes, 0.5 for every 1 share. So here how many shares are, 1 crore is there, na? So already here they will be getting half of this. So 1 crore, half is going to be 50 lakhs here company X will issue to Y. So this is going to be right answer. Okay. So 1 crore into 0.5 and this is going to be 50 lakhs as your answer. Okay. Chalo. Next. Here this formula is also given. Next. The strategy where a company sells its most valuable assets to reduce attractiveness to a bidder is known as white knight, poison put, crown jewel defense or litigation defense. See, white knight means what here? White knight means, let's say someone is doing hostile takeover and you are not ready to sell your business. Okay? So you will sell to your one friendly company. That is what white knight. Litigation means you will file one court case. That is what litigation defense. Okay? And one more is poison put. Poison put means you will start taking more debt. So what you are doing for this? Poison put means you are issuing, let's say, some bonds. Okay? You have issued some bonds and you will redeem these bonds if someone is doing hostile takeover. So at the time of redemption of these bonds, you need to pay back all the amount. You need to pay back all the amount. So as you need to pay back means your liability increased, and as your liability increased, your company's valuation, that any acquirer will not take over your company, because now you are having more debt and less equity. So that is what poison put. So right answer is going to be here crown jewel defense. Yes, right answer is going to be crown jewel defense, when you are selling your most valuable asset and not selling your whole business. That is what crown jewel. Apart from this, we have pre-offers and post-offers. These are defensive strategies divided into these two phases. Pre-offer means from the day one you have made all these strategies, that if someone is doing any hostile takeover, then how you will prevent your business. So a staggered board, you will divide your board into different groups. Super majority clause means you will add one clause of 80% approval. If someone is doing the this acquisition or merger with your company, they need to take at least 80% approval. Generally, we talk about 75%. But if you add this clause in your MOA and AOA documents, you need to take 80%. Then poison pill means here you are giving your existing shareholders one right to purchase shares for a very low amount. Then poison put means you are increasing your liability. Dual class share means you are issuing different classes of share, where you are going to give some special rights to any particular class of group. Then golden parachute means you are providing some, you can say, luxurious offers to your top level management if anyone does any hostile takeover. Then post offer, first is green mail, repurchasing your shares by paying premium amount. Then Pac-Man defense means if someone is purchasing your product, if someone is purchasing your company's share, purchase now their company's share. So that is what Pac-Man defense. Litigation, file court case, and asset restructuring, that is crown jewel, when you are going to sell most valuable asset. And liability restructuring means seeing the target company shares, buybacks, or how you can increase your liability to make your company less attractive. So these are some defensive strategies that you can opt here. Okay. So right answer of this question is answer C. Okay. So let's read this one case, and here we have 4 different options. So a dairy company, Amul Foods Limited, operates a cheese manufacturing unit that generates monthly sales revenue 1,000. And for generating this revenue, they are incurring, some monthly expenses. Machinery maintenance 3,000, material cost 2,000, labor cost 2,500, some miscellaneous expenses also 2,500. Now the management is reviewing the performance of the unit by using relevant cost concept to decide whether to continue or discontinue this operations. Now, after analysis, it is observed that the total expense is equal to total revenue. Now, based on the above scenario, which of the following is the most appropriate conclusion? Now, tell me, what final step you will be taking here? Let me just do one thing. So see, basically when you add all these expenses, so that is going to be 3000 plus 2000 plus 2500 plus 2500. So that is equal to 10,000. Yes, this is your expenses. And if you see your sales, that is also 10,000. Yes, your expenses are equal to your sales amount. So the cheese unit is earning profit of 2500. No, they are not earning any profit. They are making equal expenses equal to sales. So the unit should continue because maintenance cost is the only relevant cost here. No, all the costs are relevant here. Then the unit should be discontinued immediately regardless of the future cost reduction, or since total revenue equals to total expense, the unit earns no profit. Management may consider discontinuing the unit unless cost can be reduced. Yes, so right answer is going to be answer B. Okay, if management can reduce the cost, then only you can proceed the business. Otherwise, you need to wind up on immediate basis. So most accurate answer is going to be answer B. Very good. Next. A business has received orders from buyer X for 3 materials A, B, C. Now it already has some old inventories of products B and C as specified in the following table. Now we have to arrive at the relevant cost of each material for making the decision of whether to sell or not. Okay, so basically now you have received 3 orders for material A, B and C. Now here you have inventories. Okay, inventories means already in your stock. So already in your stock you have some values of good for B and C. And units required means what is the demand, what is the order you have received, that is what given here. And last is about sale price per unit. Okay, for all 3 products. First is calculate material A value. Yes, first thing we need to do to calculate material A value. So if you think, if you see material A, only this first one. So is there any inventory? No. Inventory is equal to 0. No stock, no inventory. Yes. So what we are going to do, we need to buy, all 50 units. Why 50 units? Because that is what demand is now. So we will buy all 50 units here. Yes, and if you are going to buy all these 50 units, how much amount you are going to pay? That is 10 per unit. So that is going to be total relevant cost equal to rupees 500. Yes, this is your first answer. Correct? Calculate material A value, that is equal to rupees 500. Chali. Next one. Now you need to calculate material B value. Now when we talk about material B, okay, we need to see that here we have some, old inventories also. Correct? So what is the total demand? Total demand is equal to 200. Yes. Whereas in your already go down, you have 150 units. Okay, in your go down, or let's say already you have stock of this 150 units. Okay, and here if you read your last side, that is 17 per unit you are going to sell this, but inventory units can be sold for 13. Means this 150 units which you are already having in your go down, you can sell it for 150. So what is the value or what is the relevant cost here? So for already stock, that is 150 units, you will multiply with rupees 13. Okay. And remaining units, of course, you are going to purchase. So remaining units is going to be 200 minus 150, that is 50. So for 50 units, now you are going to purchase. And how much amount you are going to pay? That is 17 per unit. Okay. So if we just multiply and add these two, 150 into 13, 1950 plus 50 into 70, 850. So that is going to be 2800. Yes. So relevant cost of material B, that is going to be 2800. Yes, this is your answer. Okay, chale. Coming to last part of this question. A business has received orders from, that same scenario is going on. Now let's calculate it for material C here. Now if you see the C material, 90 units already you are having, okay? And see this 30 and this 15, these two things are sunk cost. Right now these two costs are irrelevant for your decision making. Okay, these are irrelevant for your decision making. So for the material C, if we calculate the relevant cost, then you want how many units? Demand is equal to 100 units. Okay, and you don't have any separate valuation for this, so you are going to multiply with 23. So 2300 is going to be value of material C. Okay, 2300 is your relevant cost of material C here. That is answer. Yes, so this is how you need to solve in case of all your different decision making values. Yes, next. Okay. Next is about which of the following statement is correct. In a reverse merger, a listed company acquires an unlisted company. B. In a reverse merger, an unlisted company acquires listed company. C. In a reverse merger, a listed company acquires a listed company. D. In a reverse merger, an NBFC acquires a non-financial company. Now this is very easy. Now when we talk about reverse merger, okay, in reverse merger we are going to see an unlisted company acquires listed company. Easy one, direct one. Okay. Next, what does Google's rank brain algorithm primarily use to improve search results? Keyword matching, links and content, machine learning, or user review? So here when we talk about Google's rank brain, they are using machine learning. Keyboard matching, links and content, no. User reviews, no. Right answer is machine learning. Yes, they are seeing what user is searching again and again. Yes, and by that they are providing the same reference if you even type just one single alphabet also. So that is what machine learning. Correct answer is answer C here. Then VLC Limited has a NPM of 10% and a growth rate 14%. VLC dividend payout ratio is 1 minus B, that is 0.4, and R is 0.19. From a basic point of view, VLC PS multiple is. Now here you need to calculate price to sales multiple. Yes. So price to sales multiple, here we have formula that is NPM into 1 plus G into 1 minus B divided by R minus G. This is the formula. Now already we know how to calculate this 1 minus B. Yesterday also we discussed about this, that profit, suppose company is earning 100. So company won't be distributing 100 rupees to their customer, to their investors. Let's say company distributes only 10 rupees. Yes, so this is known as dividend. Correct? And how much they are going to retain in the business? Let's say rupees 90. They will be reinvesting this 90 to earn the profit, to expand their business. So this is going to be reinvestment amount. Yes, and if you write in percentage, that is going to be 90%, and this is going to be 10%. This is also known as dividend payout ratio, and this is going to be retention ratio. So here NPM is given, that is net profit margin, that is 0.10 into 1 plus 0.14, and dividend payout ratio is already given, that is 0.4 divided by R, that is 0.19 minus growth is 0.14. So what is your price to sales value here? 0.1 into 1.14 into 0.4, that is 0.0456. 0.19 minus 0.14, that is 0.05. So 0.0456 divided by 0.05, that is 0.912. Okay. So if you sell 1 unit of your goods, your price of your shares is going to be 0.192. That is the interpretation we take from this PS multiple. Next, match the following we have. Column A, gap analysis, strategy evaluation, SWOT analysis. Column B, we have definition. So gap analysis is about tool that helps to analyze both internal and external factors simultaneously by assessing organization's strength, weakness, opportunities, threats. So third is equal to A. Remember, strength and weaknesses, these are internal factors. Opportunities, threats, these are external factors. Hana? This is positive point, this is negative point. Positive, threats, negative. Yes. Now, second, a process of assessing the outcomes of strategic plan by analyzing how well the business strategy has been understood and executed. So this is your second B, strategy evaluation. Yes. So here we are checking our outcomes, okay, based on our targets. Then gap analysis is going to be C. This is the tool used to identify the internal weakness and performance deficiencies by comparing current position and desired position and taking the steps to bridge the gap. So gap analysis talks about how you can, clear this particular gap. So correct answer is C, B, A. Yes, right. Next, A Limited is considering its new project with the following details. Yes, you have initial capital cost, annual unit sales, selling price per unit, variable cost per unit, fixed cost per year, and then you have discounting rate. Yes, next side you have all the figures. Let's calculate the NPV of the project. Assume that the tax rate is 0. Consider life of the project 3 years and PV of 3 years is equal to 2.6730. Here we need to calculate NPV. Yes, and for the calculation of NPV, we require sum of present value of future cash flows minus initial investment. Yes, so if you see, initial investment is already given, that is 400 crores. Okay. Now what we need to calculate? We need to calculate future cash flows. So let's start with the selling price, that is 100 minus variable cost, that is 50. So it will give you CPU, contribution per unit 50. Now this is per unit data, but we require to multiply with the units, that is 5. So here total contribution is equal to 250 minus fixed cost, that is 50. So this will give you here EBIT, yes, that is 200. Okay, now this is our cash flow also 200, and this is our per year cash flow. Okay, because apart from this we don't have any other data, so we will be taking this 200 per data into 2.6730. Every year 200 200 200 you will be earning, and for each 200 we need to take their present value, but already they have given you present value annuity factor, so just multiply 200 into 2.6730. so that is going to be 200 into 2.6730 minus 400. So NPV is going to be 134.6. Okay, this is your answer for NPV. Yes, I hope you all are calculating this. Yes, without calculation you will not understand. Okay. Chaliye. Next. Now again in same question they are asking, compute the impact on the project's NPV considering 2.5% adverse variance in selling price and variable cost. Okay. Again we need to calculate NPV. Yes, NPV for two different situations. Now first, when you are giving adverse effect to selling price, and second, when you are giving adverse effect to variable cost. Okay, so here if you talk about selling price, okay, so in case of adverse situation, your selling price amount will increase or decrease. Yes, your selling price amount will increase or decrease. In case of adverse situation, your selling price amount will decrease. And so minus 2.5% of 100. So this is going to be 100 minus 2.5. So your new selling price in adverse situation is going to be rupees 97.5. Now in case of variable cost, adverse means your expenses will increase. Your loss will increase. So here this cost will be added 2.5% of 50. So 50 into 2.5%. Rupees 51.25 is your variable cost. Now here they are asking compute the impact on the project's NPV. Okay. Now this is your that sensitivity based question. This is your based on sensitivity based question. Okay. So here that term is missing. This sensitivity word is missing here. Otherwise you are going to adjust in one question only. Okay. But this question was from sensitivity analysis, where you are going to give this effect, one by one. Okay, so we are going to calculate separately. Now, selling price, you are going to change. So, what selling price you are going to adjust here? So, new selling price is 97.5 minus variable cost. That is going to be 50. Yes, so 97.5 minus 50. Take it. Thank you. So this is your 47.5, which is your contribution per unit. Now multiply this contribution per unit with the total units. Okay. So total units here is again same, that is 5 crores. So 47.5 into 5. 237.5 minus, here we are going to subtract with the fixed cost. So fixed cost will remain constant, everyone. Okay, so this is going to be minus 50. So 237.5 minus 50, this will give you 187.5. This is your new cash flow. Again, I am repeating. See, in this question, one term is missing. Okay, that is sensitivity. Yes, this question is from your sensitivity analysis. Now, as per the sensitivity analysis, we say, okay, my calculation part is missing over here, no? Okay, wait. Okay. Now, as per this question, if you refer in your IFBF book, they are saying to calculate sensitivity analysis. Means one factor, if you change, how your answer will be affecting by keeping other factors constant. So here selling price, you are changing, keeping other factors constant is one NPV calculation. Now, changing variable, keeping other factors constant, that is your second NPV calculation. So basically, we need to calculate NPV for two different or different types. That is what sensitivity based calculation. So new cash flow 187.5 into present value will be same, multiply with 2.6730. So total your present value of future cash flow is going to be 187.5 into 2.6730. So this is 501.18 minus initial investment, that is 400. So answer means NPV here is 101.1875. Okay? Remember, this is 101.18. Okay. Again, I am repeating, this term is missing here. So please don't adjust in one calculation only. We need to calculate in different NPVs by changing one factor. Okay. Next is when we are giving effect to variable cost. So selling price will remain same now. Yes. Now we are going to take selling price equal to 100, but variable cost you are going to take, that is 51.25. So contribution per unit 100 minus 51.25, that is 48.75 into units. Take a number of units, that is 5 crores. So if you multiply with this, you will be getting 243.75. This is total contribution minus fixed cost, that is 50 here. So what is your cash flow, future cash flow or EBIT, that is minus 50, 193.75. So new cash flow 193.75 into present value at the rate same, that is going to be whatever the rate 6%. Okay, 2.6730. So if you multiply with 2.6730, that will give you 517.89. That is present value of future cash flow minus initial investment, that is same 400. So this is going to be 117.89. This is your NPV. Okay, so this is how we need to calculate NPV for different cases. So if in exam they ask you that in which particular segment you are having highest sensitivity level, then you are going to select variable cost. Because of variable cost, you can see here, greater deviation. Okay, so this is how you need to value in case of sensitivity analysis. I hope everyone got this. Okay, next. YouTube and Google follow which of the following profit models by offering basic products for free and earning through advertisements? Profit multiplier, efficiency, advertisement, or switch? Both. Profit multiplier means companies are selling first, very low margin product, or you can say they are selling FMCG products. Okay, and slowly they are taking this product as your luxury product. Okay, that is what profit multiplier. Oh, just a moment. I think Oh, sorry, no, not this is not the definition of this profit multiplier. Okay, this is the definition of your profit pyramid. Okay, so profit multiplier is like Disney. Okay, best example is Disneyland. Yes, when they started their cartoon, that is Mickey Mouse and all. Okay, no one used to like that particular cartoon, but after they started tiffins, bags, and now we have Disneyland also. So now they are multiplying that amount. Okay, because of those cartoon characters, now they are earning huge profit. That is what profit multiplier model. But what I gave this example now before this, that is profit pyramid model. Okay. Companies first they are manufacturing FMCG products or low margin products, and then they are taking gradually towards luxury products. That is what profit pyramid model. Okay, and here example we have, that is General Motors. Then efficiency model here means basically we are waiting to get market mature. Hana. As soon as market gets mature, companies are entering and they are enjoying the profitability. Like Dell, Hana South West Airlines, that is what. So this is not the answer. Then advertisement model, that is the correct answer. Google and YouTube, they are earning revenue by displaying or by showing advertisements in between your videos. That is how they are earning. Okay, right answer is advertisement. Switchboard model means e-commerce business. They are using this model. Correct? They are linking large number of sellers with large number of buyers. So right answer is answer C here. Next, if a share's market price is 50 and a warrant allows the purchase of one share at an exercise price of 40, what is the theoretical value of the warrant? Now here we need to calculate the theoretical value of the warrant. So what is the formula we are going to apply here? Market price of this share minus your exercise price of warrant. Yes. So what is your theoretical value? That is 50 minus 40. That is equal to rupees 10. DMart. Again one example of this efficiency model. Okay, Walmart, DMart, all these are examples. Next, which of the following pair is correctly matched here? You need to identify which pair is correctly matched. ISO 14007 Sustainable Finance, ISO 32210 Environmental Cost and Benefit, ISO 14008 Framework for Sustainable Finance, ISO 14097 Assessing and Reporting Investments Unrelated to Climate Change. Yes, in which particular option you can identify the correct option here? Now this ISO numbers are very important. Hana, remember, they are asking direct questions from this. So if we talk about 14007, here we talk about cost and benefits related to environment. Yes, and sustainable finance is covered under, that is 32210. Hana, we talk about in this. And 007 is covered, is talking about cost and benefits. 14008, here we talk about monetary amount. Yes, and framework for sustainable finance is what covered under 32210. So right answer is answer D. ISO 14097 talks about the reporting investment related to climate change. So here is one quick table for you all. 32210 framework for sustainable finance, 14007 cost and benefit, 008 monetary valuation, 097 preparation of reports, and one more ISO is given in your MCQ, that is 14001, which talks about environment management system. Okay, if you check your IFBF theory part, you won't find 14001, but it is given in your MCQ part. Yes, where you check your knowledge, last part of your book, there they have given this 14001. So it is very important. environmental management system. Yes, next. Now, if a company issues 10 lakh shares during an IPO, how many shares would be allocated to the public based on the shareholding composition? So now here, if company is issuing IPO, this is from your SPAC companies. Okay? How much public will be holding and how much shareholders, that founders are going to hold here? If we talk about founders, they are going to hold 20%. And public equal to 80%. So if total is equal to 10 lakhs, then 2 lakhs founders and 8 lakhs public. So we need to talk about the public. So answer is going to be answer D. Yes, remember this is also very important. They asked in your PYQ about the percentage. Yes, how much public and how much founders they are going to hold. Okay. Next. A cost that has already been incurred and will remain unaffected by the decision, that is going to be relevant, future, opportunity or sunk cost. Opportunity cost means the cost that you are incurring while selecting the best alternative course of action. That is what opportunity cost. Future cost means whatever expenditure you're going to incur in the future, that is what. Relevant costs which are necessary for the prediction. Sunk cost means already incurred cost, already paid cost. Now whether you use the facility or not, that is already paid one. So that is sunk cost. Right answer is answer D. Then if DO is the dividend just paid, then the formula to calculate D1, that is dividend expected next year, is so tell me the formula that you are going to use for the calculation of D1. That is going to be D0 into 1 minus G or D0 into 1 plus G. Yes, right answer is going to be answer C. Not division, not just a plus. No. Here, see what is happening. Let's say we talk about your salary. Okay. This year you are getting 10,000 salary. This month you are getting, let's say, 10,000 salary. And your bank said you will be getting 10% increment in your salary. So next year, how much you will be getting? That is 10,000 plus 10% of 10,000. This is what you will be getting here. So now total next year you will be getting 11,000. Yes, means you are adding it. So if you take common 10,000, 1 plus your 0.10, that will give you the same thing. Just open the bracket, multiply with this 10,000, multiply this 10,000 with 0.10. So that is 1,000. So that's it. That is also 11,000. Okay, this is one mathematical way to solve the equations now. Okay, how to open the bracket? This is what we are doing here. So we need to add your growth rate. G means what? G means your expected growth rate. Yes, this is your expected growth rate which you are going to expect in future. Always remember growth rates are here expected one. Okay. So right answer is answer C. Next. What is the hurdle rate in the context of venture capital? How we define this hurdle rate? That is the maximum annual return? No. That is the minimum annual return, which is measured as internal rate of return and guaranteed to LPs. LPs, who are these LPs? Limited partners. Limited partners are giving funds to venture capital firm. Okay, and then they are distributing to startups. Correct? This is not the average. This is the minimum amount raised. No. Right answer is answer B. That is the minimum annual rate of return that is you are going to promise to your LPs if you are a venture capital firm. Okay, this was asked in your PYQ. This hurdle rate. Very important. This is your answer B. Okay, here also let me write. This is answer C. ठीक है, next. A monthly charge is paid by the SPAC to the sponsor in exchange for the sponsor providing utilities, office space, secretarial support, and other administrative services. Now, in accordance with an administrative services agreement between sponsor and the SPAC, which is the IPO agreement used here? Securities assignment agreements? No. That is a private placement warrant purchase agreement? No. Right answer is administrative service agreements. Just read this agreements. We have so many different types of agreement under SPAC. So read it once. Right answer is answer B. Next. In the three-stage model, dividend discount model, the second period of growth will. When we are talking about, this dividend discount model and we are using three-stage model. So that second period talks about what? There will be increase in your parabolic fashion. There will be increase in linear fashion. There will be decrease in linear fashion or decrease in exponential fashion. Yes? Yes, there will be decrease in linear fashion. Okay, right answer is going to be answer no. Correct answer is answer C. Array, first you have exceptionally high, that is going to be your exceptionally high growth rate, and then you will see the fall, that is your linear fashion, and then you are going to see the constant, that is normal growth rate. Okay, that is what your three-stage model. In H model also, after some time you will see the fall. So it is a combination of your H model and your two-stage model only. Okay, it is a combination. Three-stage model is a combination of these two things. There will be decrease in linear fashion. Over the time, you will equally divide it. Okay, that is the right answer. Answer is C here. Then, determine which of the following does not qualify as an example of intangible fixed assets. Very easy one, very direct one. Mining leases, computer, spectrum, or patents. Right answer is answer B. Yes, leases, spectrum, patents, all these are intangible fixed assets. Yes, so remember these type of questions also they can ask in exam. Now, here it is answer B. Okay, next. Identify the ratios shown below that which can be used for calculating financial leverages. Debt to equity, debt to EBITDA, interest coverage ratio, or DuPont analysis. So let's solve this last question. So remember, for the degree of financial leverage, we are going to use all these methods: debt to equity, debt to EBITDA, interest coverage ratio, and DuPont analysis. So right answer is going to be answer B. Okay? Debt to asset, debt to equity, debt to EBITDA, DuPont, total assets divided by total equities, and interest coverage ratio also, that is EBIT divided by interest expenses. So all these 5 types of formulas you can use for the valuation of financial leverages. Chaliye, so with this we complete our today's session, and after this means around 11 p.m. you will get the Chalisa. Now tomorrow morning around 6 a.m. we have our expected paper session. Take expected paper session. So just quickly we will again revise all your important topics. So make sure you join tomorrow early morning at 6 a.m. And before you go for your sleep, watch this Chalisa in a very quick, it will be recorded one. It will be recorded one. Because here we are, playing this Chalisa around 2.5 speed. So that you can complete your Chalisa in a very quick manner. You can quickly revise your concepts with that. So finally, tomorrow is your ABFM paper. Correct? So all the very best, everyone. And remember, whatever you have learned in this 1 week, you have given your more than 100%. So of course, your result will be also like that only, because you have done your hard work. So now you will be getting that payoff tomorrow. Okay. Time duration roughly around 45 to 50 minutes. Okay. So all the best, everyone, and make sure, if you are going for the first slot, then please try to share your questions, because that can help to our next shift candidates, second shift and third shift. And make sure to share your marks and share about your exam experience, like exam was difficult, easy, or moderate, because that depends on you only, that how you are giving the you can say the feedback of your exam. We can prepare, or we can reframe our this all the Maha Marathon series, or this future revision series for our future candidates also. Wishing all the best to each and everyone. Remember, of course, you are going to clear with very good marks. And one more thing, that in your paper, of course, no one knows what level it will be. If it is easy, then of course you're going to tackle it, but remember, if it is above average or difficult question, be calm. Okay, first of all, be calm and try to find those questions which are very easy. No need to solve 100 questions first. Try to find those questions which are very easy, and if you are giving more than 2 minutes time to any question, then leave it. No need to give more than 1 minute to any one question. First try to solve, first try to see all the 100 questions, and if you get the answer, tick it. Tick immediately and then proceed with the second questions. No need to wait, no need to think, no need to plan how to solve it. No, do it during the last 15 minutes. Okay, if you complete all your confident questions, then only go with dicey questions or confusing questions. Otherwise, leave it. Even if you are doing with the accuracy 50 to 60 questions, of course you are going to clear it. So maintain your accuracy rather than solving 100%. Maintain accuracy. That is what you need to do. Okay, you will get this PDF in my Telegram group. Yes, if you are in that, or if you have my WhatsApp group, or if you are in my WhatsApp group also, I will be sharing in that group. Okay, so let's wind up the session now. All the best, everyone. Thank you so much for joining. And tomorrow morning, 6 a.m. again, we will be revising all our important concepts. So thank you. See you tomorrow, and good night.